Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. What am I seeing here? Nick is pretty late often on the last few weeks. Better late than never. Are you guys questioning my on-timeliness? No, I'm just kidding. I was late today. I apologize. ADP numbers just came out and market doesn't love them. What's new? My goodness, man. Also, can you guys just confirm that you can hear me okay? I just want to make sure. We work from home on Wednesdays. Also, this light is kind of bright. And I still don't like that. I feel like I'm glowing today. We're just going to be glowing today. Anyways, yeah, ADP numbers just dropped, guys, and the market does not love it. Thank you guys for the audio feedback. So we had 77,000 jobs, compared to the forecasted 141K. I would call that a miss. That is another miss. And the market just doesn't need that right now, right? The market's already been kind of in free fall mode in recent days. Take a look at the 4-hour chart. You can see just kind of this ugly selling. Actually on the 4-hour chart, this doesn't really look all that bad. But when you zoom in, when you take a look like the hourly, you can see it's been a pretty good sell-off here for the S&P 500 in recent weeks. Taking a look here at where we are in terms of structure, in terms of what we've been talking about so much on the channel. Gosh, man, I am so glad that my channel is not one of those perma-bear doomsday channels, because I've been kind of bearish in recent weeks. And the comments section, man, people don't like when you're bearish, which is understandable. I don't really like perma bears either, and I'm not a perma bear. Like I'm actually actively buying the dip on this stuff. It's just my content is, there's a lot of stuff that is bearish right now, right? The stuff going on with tariffs, the stuff going on with, what we just saw, ADP numbers coming in weak. There's stuff that is concerning the markets, and covering it has been met with a lot of backlash. But, honestly, I've gotten, comments from people that are not liking what I say for years now. I'm used to it. But I just observed that is like, if you start getting bearish or you get concerned or you point out things in the market that are worrisome, people don't like that, right? Because it makes sense. Somebody out there who has a whole bunch of money sitting in crypto or sitting in stocks and they're getting killed, they are not in a good mood. And when you say, yeah, this market looks like it has room to keep going down, they hate you for it, right? But look, I want to clarify. I've said it in every single video, and yet people still are like, Nick, you're a doomsday, it bounced today, you idiot. Every time you say it's going down, it goes back up. I just want to clarify for the record, for the people who actually listen to what I have to say, you've hopefully been hearing what I do have to say, which is I think this is a big picture opportunity to buy some stuff that I like for the longer term. But in the short run, it's not the end of the world if we have a bearish move in the markets. People are like so conditioned now that the market has to go up every day, otherwise they can't handle it. Like, you know, and it's just the state of our world, I think, to be honest, as people are so instant gratification. And look, you can be saying that you think that the market is overall, going higher, but in the short run, it's not being, a hater or a doomsday or a big pessimist to say it's not out of the question that we could see lower prices. I've been saying that since we hit the all-time highs. I'm not short the market. I've not once come on here and said, look, I'm short the market. I'm not short. But to think that there's just this V-shaped recovery coming, could it happen? Of course it could happen. The markets can do crazy things. But I think it's not, outright bearish to say, yeah, I think this pullback has a little bit more room to go test some key levels and establish a new support level and move higher. That's my perspective, and that's how I've been, for the last few weeks. But my goodness, it's been an interesting time as a content creator, because you start posting about, hey, these things are worrisome. This is why the market's freaking out. And people start calling you, oh, you just perma bear. You're look, it bounced, you idiot. It's been interesting. Comment section's been interesting. Anyway, sorry for the rant. Let's talk a little bit about what we've got here on the radar today. We've got stocks lower. We've got, actually, look at the DAX. DAX is up a lot today. Nikkei fell below this support level, which I thought was interesting. Chinese stocks are bouncing here as well. Bitcoin is actually up 2.8%, back to 90K, just about here. Not a bad bounce for Bitcoin. TLT, I do still have a long position in this. This one's definitely pulling back here a little bit. Gold, taking a look at gold here. Gold, I'm still in the trade, and we'll stay in the trade unless we... So here's my game plan on gold. If we break these highs, oops, that was badly drawn. Hold on. If we break these highs, right, what I'll look to do is take my stop loss and move it into profit. And if we do not break those highs and we just tank through the lows, I'm going to take a loss on this trade. My thought with gold is that if we hit stop on gold, and continue down to this area, I would probably try again on gold longs, as long as I continue to have a confirmation from the edge finder, which right now we have a very bullish reading on gold on the edge finder. So I really like the setup here. Part of the reasons that we're getting very strong gold bullishness is, check this out. So I did more work last night on the economic heat map, and I moved this column here, changed the name of it to the surprise column, right? Because this is ultimately how the edge finder scores stuff. It looks at the actual numbers that are coming out for key economic metrics, right? You've got your services PMI here, you have your inflation statistics, you have all the stuff, right? What we're looking at for this is, oh, and by the way, ADP numbers, when they update in here, they're going to be red, which is crazy. So we're actually straight up seeing some weakness coming into the labor market there. So here's the thing. The surprise index here, this far left column, is what I care about most when it comes to economic data, right? Because why is the pound so strong recently? You want to know why the pound's so strong recently? Has anybody been watching for the currency traders out there, for my FX junkies? Why is the pound so strong? Well, there's a couple reasons. One of the reasons is that I was looking into it, but I believe, and please correct me if I'm wrong, but I believe trade balance between the US and the UK is much more balanced than the US with other places. I also think that the tariff differential between the two places is not too crazy either. So the kind of reciprocal tariff stuff doesn't kill the UK like it really hurts Canada and Mexico, right? Who massively exports the United States, and there's a bigger spread there. So my point is, on a relative basis, the UK-US kind of relation trade stuff it makes the pound look strong relative to its peers, right? I think that's where I'm trying to get at. That's one side of it. The other side of it is look at our economic heat map. We have a lot of blue here for the UK, right? What does that tell you? Blue signals, for those of you who are Edgefinder newbies, blue typically means that the surprise was a good surprise for the economy. So, for example, we had stronger services PMIs than expected forecasted for the UK last time around. 51.1 came out. We were expecting just 50.8. The higher the number this is, the better the outlook for the economy, right? Well, that's a positive, so we get a blue right here, right? So what we're seeing is a pattern of blue. Now, is GDP great in the UK? No, it's at 0.4%. That's really not that impressive, but it's at 0.4% when we only expected 0.1%, so make this blue. Do you guys see where we're going with this? That is how we read the economic heat map. This is how the Edgefinder scores stuff on a fundamentals basis. If you are trying to better understand fundamentals, you don't want to just look at this, which is where you can see, Forex Factory, all that. You want to look at this. This is my favorite part of the economic data studies that we do on the Edgefinder. The surprise index, as simple of a calculation as it is, makes it so that you can see at a glance if economic data is hitting expectations, exceeding expectations, or missing expectations, right? So the UK, the pound is trending up because some of your fundamental data. I mean, look at the pound against the yen. A lot of other stuff has gotten hit a lot harder against the yen. Pound is held up. Pound dollar, pound Swiss, right? Pound Swiss holding up pretty well. So my point with this is, why is the UK, why is the pound strong? Is it because the UK's economy is gangbusters, doing great? Not necessarily, but it's doing better than what people were thinking, right? People were expecting it to fall apart, etc. It's upbeat. So you want to understand that. Once you understand how that functions, economy, it's not about this overall state of the economy. Is it good? Is it bad? If it's bad, I want to short. If it's good, I want to long. That's maybe long-term perspective, maybe for like investing, long-term perspective stuff. But for trading, the surprise index is what you want to look at, in my personal view. So if I look at the US economy, we went from all blue on the surprise index to mixed, right? So on the inflation front, it's not been good, right? Inflation is still sticky. On the, inflation's been sticky for multiple years now. And, will that change? Possibly. I know a lot of people want to say that the tariff stuff is just super inflationary, and it kind of is, but there's a second part of that. If tariffs come into place and it slows economic activity a little bit, inflation likely would come down too, right? If it slows labor stuff enough. Like if you actually enter into an economic slowdown, inflation usually comes down in that environment unless you have supply issues. But long story short, inflation is still sticky in the United States. Manufacturing PMIs missed expectations this week. And in just a little while, guys, we get services PMIs. It missed big time last time around. Tell you what the market does not want to see today. The market does not want to see another miss on services PMIs. This is the stuff moving the market. I know everybody wants to look at technical charts. I get it. They're fun to look at. But the stuff that's moving this market right now is the fundamentals. Trump's words have impact on the data that we're looking at here. What I look at as a trader is I wait for it to materialize in the surprise index right here, and then ultimately in the algorithm that looks at all that data and generates bullish and bearish readings for charts that I like to trade. So ultimately, I have a very bullish reading on gold. I still remain pretty much mostly convicted on the long side for gold. If I just filter out here for a second my top setups, and just take out neutral readings, I continue to be bearish yen crosses, specifically bullish yen, right? So if I'm bearish Swiss franc, bullish yen, bearish Kiwi dollar, bullish yen, etc., right? So I like that whole setup. Do you have a crash course on all this, or do I have to get a finance and economics major? Great question. I do have a free course on my YouTube channel. Just a fair warning, it's a free course, but in that course, if you watch the whole course, you're going to want to buy the Edge Finder. That is my fair warning. If you watch the course, the more you stare at this stuff fundamentally, the more you're going to want to buy our company's software, the Edge Finder. That is my fair warning to you. If you are not careful, you're going to start realizing that fundamentals move the market. Economics are really powerful for charts. And ultimately, you're going to want tools to help you track that stuff better. And you may consider working with the wonderful crew at A1 Trading. If you don't have a copy of the software, I should mention, we have some really big discounts going on right now for the Edge Finder. It is currently 35% off. If you're interested in getting a copy, if you've seen enough, you're like, fine, give me that tool. I need it. Then you can come join the family of fundamental traders. The vast minority of traders, by the way. Most retail traders never tap into fundamentals. They stare at technical charts all day long and they wonder why trading is, not working for them. Fundamentals are what move the market. Big news candles are what move the market. You need to understand them. Otherwise, you're just trading in the dark. Absolutely, Nick the salesman. I got something to sell you, and it's something I believe in, right? It's something I would buy over and over myself. In fact, I spent a lot of money building this thing, so I would buy it over and over. So yes, it is a sales pitch. I never hide that I have something to sell on this YouTube channel. I sell something that has genuinely helped me tremendously to become a profitable trader, which is fundamentals. I stared years after years at YouTube channels saying best technical trading strategy now, and it's price action, and I get it, like that stuff is great, but that's not the secret sauce. That's not the secret sauce, right? Anybody can draw support and resistance. Anybody can use indicators. Anybody can use trend lines. Anybody can use advanced technicals. All of it is, anybody can do it. And if anybody can do something, nothing in this world that's easy is worthwhile. Everything that's wanted, everything that you desire usually has some difficulty behind it or in front of it. Anyways, S&P continues to move lower. So I'll tell you, like I said earlier, where I'm at with this market. I am selling puts on stuff that I like. So I want this market to keep going lower so that I can continue to look to buy the dip on stuff. I have some stocks that I really like. Here's my stock list right now. I don't technically own all these names. I'm looking to sell puts on NVIDIA, sell puts on Tesla, sell puts on Google, Robinhood, Uber, Intuitive Surgical is another one that I'd like, PayPal. I don't have any position on Palantir. It would take a while for this thing to get to a point where I'm actually looking to buy that dip. Stocks for me are like, most of the time I don't do a whole lot with stocks, but when stocks are selling off, I am always looking to buy the dip. So ultimately, I think Palantir has more room to continue lower. But if you get Palantir down to 60s, 50s, I will probably buy the dip. But that's a super high risk stock for me. I can't really justify buying it where it's at. Maybe I'll miss it again. I've missed it many times in the past. You can ask Frank in our office, or if you are in our VIP group, you can send a DM to Frank and he could tell you the number of times I said, Frank, I'm going to probably buy some Palantir if it goes down to this price. And I'd said that for so long. So maybe maybe me saying I would buy it if it goes down to 50 or 60 is a great indicator that it's never going to go there. I'm kidding. I don't know. But that is still my consensus. I've got to wait for the right price on a stock that I like. So S&P 500, like I said, we have now officially tested briefly yesterday intraday the 200-day moving average. I mean, this is just look how fast we fell, guys. Look how fast the 200-day moving average. It seemed impossible to test the 200-day moving average for so long. We didn't even hit the 200-day moving average in August. We have officially hit the 200-day moving average in the context of a bull market. Look, what that means is I start buying the dip. And so do I see the possibility of this market going lower? Yes. Am I trading it short term with a stop loss to the upside? No. I'm looking to buy companies that I like for the long term. But trading wise, I'm still very focused on gold. I like gold to the upside. I think we have nice uptrend. Yes, we're far away from the moving average on this one here too. But again, I'm trading this momentum with a stop. So I like charts when it comes to, charts that I like to trade. I like trading the ones that are moving well. I don't want to try and buy the ones that are, falling every day. So we'll see. Let's hope the dip doesn't dip and your account gets dipped. It could totally happen. In 2022, I bought the dip so early and just watched it dip for another year. So please understand, just because I'm saying I'm buying the dip, I'm not going all in. I'm talking about starting to accumulate more shares on stuff that I like. NASDAQ also looks pretty ugly here. NASDAQ, did we ever get a 10%? We just missed the 10% mark. Maybe we'll go down and test this 19,950 area. But yeah, I'm watching the indices. I feel like I dodged a bullet this year because I got out of a lot of my index stuff towards not the highs. I'm not going to say I took profits here, but I got taken out of some of my stuff over around here and here. And so I've missed this kind of recent sell-off. So we'll see. I'm also really curious to see with what happens with TLT. TLT is a play that I've been in for some time, and I think that we may be seeing some rate cuts this year. The Fed officials keep saying, no, we're not going to cut rates. No, we're not going to, Fed officials seem still very hawkish. But what I want to show you is that the bond market is calling cap. This is the bond market right now. Bond market is saying no rate cuts. That is cap. Okay? That's cap. That's what the bond market is saying. Because the bond market, ultimately, the Fed officials can say one thing. Jerome Powell, all the different Fed officials seem pretty hawkish. They're like, hey, we're still sticky inflation. We can't. But the bond market, guys, I heard an incredible quote recently. The best economist I've ever seen. I don't know who said this. You can find it. Best economist that I ever have seen is the stock market. The stock market votes every day because it is the human collective. It's the smartest brains trying to price things out. And the smartest brains are not always right. But if we take the bond market at their word, at their action, I suppose, at their action rather than the Fed officials' word, the bond market is saying they're going to cut rates. That's what this is telling you. Now, why they are cutting rates is the concerning part. The bond market seems to be saying, look, inflation has not come down that much, right? Look, inflation is not down. We're not trending down on inflation. In fact, inflation has actually trended up. So why would the bond market say the Fed's going to cut rates? It's because these other things are dipping, right? Our growth metrics. ADP just populated in the Edge Finder, by the way, guys. Look at this. ADP, 77K, big miss in the red territory. This just makes me want to stay long gold. So I am going to stay with the trades that are working for me. Again, when I look at this heat map and I see, look, we went all blue. At one point, we were almost all blue on this chart. Now we're almost all red. I think that as a trader, as an investor, there's two sides of me, right? I have this internal, I have this dual personality situation. As a trader, this looks bearish for the markets. This looks like momentum in the short run is continuing down. The investor dual personality side of me is saying, keep going. and I'm going to continue to buy that dip on longer term stuff, not with leverage, not with a tight stop, long term, more kind of like semi-active investing type stuff. So there's two sides of me on this. Short term, though, trading perspective, which is I know what most people watch my streams and videos for, I remain bullish on gold and cautious on stocks. I don't see a huge rip your face off rally coming in the stock market at this time. I'm just going to stay cautious on stocks. And again, that has been the right play here recently. Staying systematic has been a theme for me in 2025. When I say systematic, the Edgefinder's top setups algorithm is my system. It may not be your system, but it's my system. Whatever your system is this year, I would encourage you to do the same. Stay systematic. Look for rules-based watch list setups. Stick to your system that you've backtested. I've done so much research, so much work to build what I've got in front of me. This year, I've been pretty good for years now sticking to my rules, but this year I'm going to a new level with it. I am staying super disciplined, super consistent with the top setups algorithm. I'm going to watch and refine the top setups algorithm every day this year and continue to trade my system. So far, it's been working very, very well for the last, multiple years, but this year so far, we've had some really good success. Indices fell off, so no more indices. Sticking with gold. And again, systematically, we see some interesting things. At first, when I started seeing pound dollar, euro dollar, I was like, nah, I don't know about that. Edgefinder was right? So we stick to the system, stay systematic. I trust my system more than I trust my own emotions, right? I've got to stay systematic this year. That is how I'm going to approach this year. Edgefinder is 35% off for a limited time this week only, actually. If you haven't picked up a copy and you would like a chance to get access to the same tools that I'm using, if you are a fundamentalist trader or you are aspiring to be a more macro/fundamental trader, this may be the tool for you. If you have some questions about the tool or you'd like some information, I do also want to mention for my friends who are outside of the US, we do also offer some inclusive pricing options. Please feel free to send us a direct message using the link that's just been dropped in the chat to speak directly to our support team. Do not miss the discount. Start trading with fundamentals. Again, make 2025 your year. There's so many people who are, every year they catch themselves in this loop of, I'm going to make my trading great this year, but then they fail to prepare. They don't put in the work. They don't do the back testing. They don't stay systematic like I'm talking about. They just trade whatever shows up on the screen, whatever their heart desires, and they wonder why they don't get any results and they lose money. It's, be careful be careful out there. Again, if I can leave you with one thing today, stay systematic, whatever your system may be, and stay disciplined. Okay, up next, we've got Tom from Simply Forex taking over the show here for a little bit. He's going to be coming on here talking. He primarily talks about Forex pairs, but I'm sure he'll get into a little bit of everything today. So stay tuned. We will be right back with Tom just after this quick break. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good afternoon, good morning, good evening, traders, wherever you're from. Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes, guys. And we're just going to take a look through some of the Forex pairs that I'm looking at. Some are at some real interesting levels, especially yen pairs right now. So we're going to take a look at all of that, but also please ask as many questions as you like about anything to do with trading. It can be a currency pair you're looking at, guys, or it could be anything to do with trading, all right? Now, we're going to start with US dollar pairs. So we've got hello Tom, hi guys, and we're straight in with euro US dollar, right? So we're going to look at the US dollar pairs in general. And to look at the US dollar pairs, we really need to start with the monthly chart. right? Because if we look at the monthly chart, there were so many key monthly levels for all the US dollar majors, pretty much all of them. And pound US dollar is a perfect example, right? You can see pound US dollar is in an uptrend on the monthly chart. And this is the last monthly low, okay? And it held, right? We had all this US dollar strength for, months, weeks, months, and then it stopped at that monthly level. And that's obviously no coincidence, guys, right? And we have had US dollar weakness ever since. Okay. And pound US dollar is not the only one. We can look at, US dollar, Canadian dollar, right? Key monthly levels, right? You can see it's held there before. And you look at any US dollar majors, it's pretty much the same scenario. And, in the words of Gandalf, they're like, you shall not pass. And again, we've had bearish reaction at this level and US dollar weakness. Now, how long will this US dollar weakness last? Let's take a look at Euro US dollar, because I know a few of you guys want to look at Euro US dollar. Now, let's drop down to the weekly chart and let's get some more ideas. Now, before this, let's go back a week, right? Before we even, this week even started, like if you was to look at the charts, you would potentially see some US dollar strength could come back into the market, right? We're in a weekly downtrend, okay? We're getting lower highs, right? And then it became a bit of a range, okay? Now, at that level, we also had a super bearish weekly candle. So you could be forgiven for thinking to sell Euro US dollar. But since Monday, Tuesday of this week, we have just had ridiculous strength come into the euro and the pound specifically, right? They are stronger than Bruce Lee and Darth Vader combined, right? Crazy strong. And now if we go back to real time, just look at the reaction we're getting at this level, right? I mean, just look at that, right? That's such US dollar weakness. And even on the day chart, this was in a downtrend. So this US dollar weakness has really come from, it just gone against all technicals, okay? And it's just flying off. Now, can we take advantage of this US dollar weakness? And with the example, get my teeth in, with the example of Euro US dollar, you cannot buy that, right? There's simply no value whatsoever in buying this pair, right? You're going to start buying up here on the day chart, right? There's no value in doing that. So that's the problem with Euro US dollar, pound US dollar. We're clearly seeing this US dollar weakness. We just saw some worse than expected employment figures as well. But we can't get in on it, right? Now, there are a couple of US dollar pairs that we could get in on. And I just took a US dollar, Canadian dollar sell trade this morning and took some quick profits. And we can take a look at that. But just to focus on this, guys, right? If a market is like this, right, unless you're getting in early on in the move, then this becomes pretty untradeable for me, right? If a market just does that, right, how and where do you get in on this currency pair, yeah, or a chart like this? And the answer is you can't really, yeah. Now, when a chart does this, okay, it starts on the same spot and ends up at the same spot, right? But this is, I'm not going to say easy to trade. We know trading isn't easy, but this is easy to trade compared to this, right? So when price retraces, it's not an exact science, but we get in roughly in here, right? And we keep buying Euro US dollar. But this is just flown off, right? It's become difficult to trade. Look at pound US dollar, exactly the same thing, right? It's just shot off, right? There's been no retrace. But euro has been crazy, I must say. Now, a trade we did take was US dollar, Canadian dollar, right? And let me just briefly run through this trade because I'll show you my entries and why I took this pair and where and how I entered. And it's all just simple price action stuff, guys. You don't have to complicate your trading, right? Just keep it as simple as possible, right? As, you know, simply Forex. This is what we're all about. We're not simple, but we like to keep it simple. And again, guys, we just got to an area of resistance, okay? And then we got a massive sell-off on US dollar pairs, right? And we got a huge bearish candle. And I would suggest this could even come back down to these lows, right, if not further, okay? So we had a big bearish candle at a resistance level, right? Simple price action. And then we dropped down to the H4. And H4 structure told us we could sell it as well, right? We was in this, if we start back here, guys, we was in this uptrend, right? And then bang, we were in a downtrend. As soon as we broke these lows in here, right, we was in a downtrend. We were getting lower lows, okay? And then all I did, guys, a very in and out trade, right? I wouldn't call it scalping, but just an intraday trade. We had a nice bearish H4 candle. And also we're below the moving average 20, which I like as well, right? Generally speaking, I'm going to sell below the moving average 20 and buy above it, okay? We had a nice big bearish H4 candle. If we drop down to the H1, it was actually entering on this candle, okay? So I started selling here, put my stop above here, and then once price got back down to here, I took my 1:1, right? Again, nothing complicated about it. H4 was in a downtrend. H1 was in a downtrend, right? If you even follow H1 trend, okay, we was in a downtrend. And we got some bearish candles. That told me sellers were in control. And we started selling, right? We sold from here. Like I say, stops here, took profit here. Now, at this point, guys, because I think US dollar, Canadian dollar potentially has some further room to the downside, as does US dollar weakness, right? So it plays into that idea. I actually closed 90% of my trade, right? And then I'm just going to let 10% run, right? And then I can even add to that trade again, right? Take some profit. If it does carry on breaking down, right? Let's say we get this, then I can add to it again in here and start selling. All right. So, yeah, US dollar weakness across the board at the moment, and we've been taking advantage of that. Now, okay, so we've got some questions here. So that some guys want to look at yen pairs. So I'm trading New Zealand yen, but the yen seems to be losing steam. Is it because of comments from Japan about not cutting rates? So there could be a lot of fundamental reasons for yen being or getting weaker, but I'm going to show you why I think yen is becoming weaker from a technical standpoint, right? Now, first and foremost, let's look at New Zealand yen, right? So first and foremost, right, you are at, with New Zealand yen, you are at a key support level, right? This was a support level back in August 24. I mean, I wasn't even born, right? And it's no surprise that price is reacting again at this level. So first and foremost, right, if you're selling New Zealand yen, do not sell into a support level, right? Just simply do not do that, okay? Don't buy into resistance and don't sell into support, right? Just don't do that. Promise me you won't do that. And that's what you're getting. You're getting a bullish reaction at a support level. And, you know, don't think of don't think of these as resistance or support levels. A support level is a buying level. A resistance level is a selling level. That's how you should think of it. So in here, there will be buyers, 100%. There will be buyers. Will buyers take it up to here? Will buyers take it to there, right? That we don't know, okay? But we can look at structure and breaks of trend, etc. But we know there will be buyers in there, okay? Now, if we zoom in, right, on the daily chart, look at that candle. That is super bullish, right? So that would suggest this does have some room to the upside. Maybe it wants to come to the moving average 20. Maybe it wants to come to this level here. Maybe it wants to make its way back up to this resistance level in here, right? But I would not be selling that candle, and I would not be selling into this support, right? Don't do that. Now, what I also want to show you guys is the relationship or the correlation between indices and yen pairs, right? Now, with the indices, right? Well, let's take a look at one. Let's take a look at the NASDAQ, right? Now, the NASDAQ is, if we look at the weekly chart, actually, guys, right? And the indices are just ranging, right? They're ranging between here and here. Okay, wants to go at all-time highs, we get sellers, right? All-time highs, sellers, all-time highs. This was literally all-time highs, sellers. Okay, so we are ranging at the moment between here and here. Okay, now this therefore becomes a pivotal level. Okay, and if we take a quick look at the day chart, it is holding on to this level by the skin of its teeth, right? Yesterday's candle, we thought, okay, are we getting a breakdown? And then we got this huge wick back up, right? So it's still holding on to these lows. These lows haven't broken because all of these wicks keep closing back within one another, right? So it is holding on to this level. Now, as we know, guys, yen is a flight to safety currency pair or a safe haven, whatever you want to call it. So if the economy is doing well, right, then, you know, flight to safety, safe haven currencies, you know, are not really affected, right? They will become weak, right? So if, for example, this level does hold and we get a nice push up with the indices, right? Actually, let's rewind a little bit here, guys. So we got to these all-time highs, right? And price just kept dropping. And now this level is holding. And in this time, because we're having a sell-off in the indices, which are a good representation of the state of the economy, then flight to safety pairs like yen, Swiss franc, right, bear with me, and gold, right, become strong, right? So if the poo hits the fan, right, and we get weakness in the economy and indices start selling off, pound, Swiss franc, and gold will be strong, right? And if we go back to New Zealand dollar, Japanese yen, yen is strong, right? And that's what we've been seeing, okay? Now, it's no coincidence that literally every yen pair is at a support level, right? You look at any yen pair. Let's look at euro yen, right? Let's go to the day chart, right? It's at a key support level, right? And and euro's been crazy strong. Let's look at Aussie dollar yen, right? Key support level in here, right? Now, bear that in mind when we look back at the indices. So we're going to go back to the NASDAQ, right? This is the NASDAQ. Now, it's no coincidence that the yen is reacting at a support level on the indices. Now, if this level holds and we get a big push up with the indices, then yen will become weak, right? And therefore New Zealand yen, that looks like a W, that's meant to be an N, bear with me, I write like a 3-year-old, right? Then New Zealand yen will become strong, right? Because yen is becoming weak. Now, if this level breaks and the economy is not in good shape and the indices are falling, then we can expect yen strength to continue, and therefore New Zealand yen trades we could carry on selling. So it's all intertwined, guys, right? Everything's correlated some way or another, right? Some correlations are stronger than others, but the yen pairs in correlation with the index and the state of the economy is a very important correlation, right? And it's all about this level on the NASDAQ. Will it hold or won't it? If we look at the S&P, it's exactly the same, right? You know, will this level hold or won't it, right? If it doesn't, right, safe havens, currencies will be strong. If it does hold, I would say we can expect some weakness in the flight to safeties and potentially, you know, carry on with this range as well. So really interesting levels on yen and indices right now. We've looked at US dollar as well, but what else do you guys want to look at? So Jack Graves, yen is weak when euro is strong. Well, euro is just crazy strong at the moment, right? German news, hence the euro push. Okay, so what else do we... Okay, Tom, if Banksy did charts, he'd write like you. I think that's a compliment, Lee. What other pairs are we looking at? Okay. Okay, so that's why it's going to be against the forces. Okay, so let's have a look at Aussie dollar, US dollar. We've got another question here, guys. Just taking a quick look through the questions. So Aussie dollar, we've sort of kind of answered, guys. I tell you one trade that I did want to get in on was Euro Swiss franc. And again, it's one of those trades where it just shoots off and it's so difficult to trade, right? If we use my back to the future button, okay, now this was one of my trade ideas for today. And, you know, and guys, if you enjoyed my analysis, want my trade ideas, then please come follow my channel, Simply Forex. I'm sure they'll leave a link to it as well, guys. All right. So I give you my trade ideas every day. And Euro Swiss franc was a trade idea. Again, it's all based on price action, right? And as you can see, we was in this, I'm even going to say this, it was in a downtrend. And then bang, we're in an uptrend, right? We're breaking these highs in here. We're getting higher highs. We've got a super duper bullish candle, right? It doesn't get any more bullish than that. And the idea was just to, take price up to here. But again, guys, right? I need to trade from an area of value. So I was looking for a retrace before we come higher. So if we look on the H4, right? I was potentially just looking for, this was where it started today. I was just looking for a retrace into here, maybe even to these last highs, maybe this gray zone, maybe the moving average 20, but somewhere in this vicinity. How I would have traded it would be a retrace, a bullish reaction, and then we start buying Euro Swiss franc. Okay, but if I don't get a retrace, guys, I don't have a trade. Okay, because what you have to think about is this, right? Now, let's say you traded the H4, right? Here is my target, this big 0.9500 psychological level. And you can see we're clearly in a H4 uptrend, right? We're above the moving average 20, and I want to take price back up to here. Now, I cannot just buy this candle, right? Because this is my target, this is my take profit. And with all of my trades, guys, I'm going to put my stop loss below the swing low on an uptrend or a swing high on a downtrend. So I would need to put my stop loss in here. And straight away, what you're risking, right, doesn't make sense with regards to your reward. So it doesn't matter how much I want to get in on this trade, I can't, because the risk to reward is skewed. And I'm looking for a minimum of a risk to reward of 1:1. Okay. So if the market just shoots off, right, I don't have FOMO, I really don't care, it can shoot off, right? The market will give me another opportunity, guaranteed, right? So that's why I'm looking for a retrace, right? And how you can, what dictates that is knowing your knowing your target and knowing your stop loss, right? Now, if price did retrace into here, right, and we started buying in here, then all of a sudden, here's my stop loss, here's my take profit, right? And I'm roughly getting 1:1, right? And the trade makes sense, okay? So, bear that in mind, guys, when you're trying to enter a trade. Really think about your stop loss placement and your target before you take that trade. So yeah, Euro Swiss franc, we wanted to buy earlier today. Everyone's looking at US dollar pairs. We want to look at US dollar Swiss franc. We're looking also looking at cars. Okay. Oil. Okay, let's take a look at oil, because oil is at a really interesting level. So not scripted. Okay, very apt. This is not scripted. You may be able to tell. But let's have a look at West Texan, right? Now, it's all about this level. In fact, let's go on the monthly chart, right? There is a level. Let's even drag this along a little bit, right? There is a level for oil that it just doesn't pass, right? And it's this level here. Okay, and that has been holding since, May, June 21, right? It's been holding for years, right? In the words of Gandalf, you shall not pass, right? So will this level keep holding? Because there's so much fundamental, information around oil at the moment, right? Trump wants to start drilling. He keeps saying to the Prince of Saudi, we need to lower oil prices. Trump also believes he's going to reduce inflation by reducing energy costs, right? So obviously the price of oil is a big factor in that. So Trump would like to see oil down here, right? It means cheap energy prices. It can lower inflation for Americans, right? Now, will it or won't it is another matter, right? Now, if it breaks this level, right? So just from a technical point of view, I'm not here to predict the future, right? That's not my job. My job as a trader is to deal in cold, hard facts. And if we get a monthly or even a weekly candle, right, that breaks this level, right, then we have got loads of free air to move into. And this could be a really nice selling trade, okay? But it's a big if, yeah? This is such an important level, right? Will OPEC, the powers that be, want that level to break, right? Yeah, everyone's got their own agenda. Now, if we go to the weekly chart, right, it's, oil has been very, very bearish, as we know, because of all those reasons I just explained, right? But again, I'm not going to sell into this level because this is a support level. In fact, we were selling oil in here, right? And these two blue lines were my targets, okay? Now, but now we're in this support level, right? I'm going to see what oil does, right? Okay, so like I say, guys, if it ends up breaking down, let's say it ends up breaking down this level, then of course I'm a seller of oil, right? It technically tells me to sell it, and a lot of fundamentals back it up, right? But if we get a humongous bullish green candle like this, then this is also a very nice area to start buying, right? And really, if we go back, well, if we just look at this chart, we are ranging at the moment, right? So until, you know, they've worked out the direction of oil, you might find ourselves in this range for some time, right? You've got this key support level where you see lots of buyers, and you've got this key weekly level, even a monthly level forming where you're seeing sellers. So we might end up in this rather large range, okay? But within that range, there's also this important level as well, all right? So if it breaks this level, we're getting up to here. And then if it comes back down and breaks that level, we're getting back down to here. And if it actually breaks this level with a big bearish candle, then we're looking for sells on oil. It has broken a key support level. Okay, we've got a couple of minutes left, guys. Let's take a quick look at gold. We've got some people saying gold 2,800 coming. Yes, I agree with that. Vicus, I totally agree. Again, let's start with the weekly chart, right? In fact, let's start with the monthly chart here. Now, gold is crazy overextended. I would say overbought, but people don't like that phrase. They're like, we can keep buying it. It could go higher. I agree. So I'm going to say overextended. But look at the moving average 20. That is the mean of the market. And ever since the gold chart has been running, it has reverted back to the mean. Now, I'm not saying it's going to do that, right? Because as this catches up, right, gold might do this and, it catches up, right? But it's so far away from the mean, right? And price always comes back to the mean. Doesn't matter how overextended you become, it works its way back, right? Overextended works its way back, okay? Now, this is where we find ourselves in very unprecedented levels for gold, right? Now, I'm out of time, guys, but let me just quickly show you this. So we're super overbought, and we've got this super big bearish candle, right, on the weekly. So I think we could take price, down to this potential support level in here and this 2,800 level. I agree with Vicus, okay? And if you look on the day chart, we are also in a downtrend, right? Gold has come up and then it's broken down, right? We're getting lower lows. Could this be a new lower high? We shall see. And I would want to see a big bearish candle take control here. Then I would consider selling gold. All right, guys. So, there you go. I'm out of time. If you've enjoyed my analysis, please come join the channel and I'll see you again soon. Thank you very much. Thanks for having me, guys.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How is everyone doing? Hope you're all well. Not seen you guys for a while. So it's been almost a week. How have you guys survived a week without me here? Crazy. See a lot of debate about cars or watches. And I'm sorry, Bashi, I'm going to have to agree with Ball out here. There is no better feeling than going out, dressed nice, expensive watch on your wrist. It's a good feeling. Because, to be honest, you get to a point where a car's pretty useless. Like, for example, if you're in London, you just get Uber Black or XL. So, watch greater than car, in my view. And, watches store value, cars just depreciate. I was watching the chat, Lee, and it felt like a very passive-aggressive debate. Yeah, Ball out gets it. Yeah, 2 rutting stags. You can't race a watch. Yeah, but you can't wear a car. Yeah, ball out gets the vibe. Anyway, how is everyone? Hope you're all doing well. Markets have been pretty crazy. Seems like we've had some stabilization though. So last week when I was on, I was talking about what was I saying? Something along the lines of me not agreeing with the markets. It seems like we've come back essentially to what I would view it as sort of sensible, if you will. So gold's picked up again. Obviously, we were having essentially a risk-off market at that time, but during that risk-off move, we also saw metals taking a hit. So in my view, it wasn't true risk-off. It was more of just panic. The markets were just panicking. Whereas now we've seen gold pick up, we've seen silver pick up, we're seeing stocks down, we're seeing the Swiss and the yen performing. So it's sort of just typical risk-off markets, with the dollar, of course, sinking to the downside. We've also got the euro significantly gaining value. So we've got essentially a complete switch between euro dollar at the moment, which is quite nice. Change in narrative. Okay, let me just read the chat. What's going on here? Is yen weak when euro is strong? Yes and no. They're not necessarily correlated, but with major currencies, when we see inflow of one, when we see large inflow of one, like we have done with the euro, we're seeing large outflow of the dollar. We can then start seeing those capital flows, obviously going into different currencies. So yeah, if we have a very strong euro, people will likely be pulling capital out of a different currency to put into the euro. So we can obviously see the dollars taking a hit off the back of that. That's just capital flows, though. Dollar Swiss. Okay, yeah, we'll have a look at dollar Swiss. I'm very, very fortunate that I just cut dollar Swiss because I was long. I think I actually took long positions around here. I basically sold the very top of this recent move, and then I cut the trade some point around one of these lows. I can't remember exactly off the top of my head, but I was very seriously considering to just let it run, but I'm very, very glad I didn't. So if we're talking about dollar Swiss, I'm still long-term bullish. I think the dollar will be okay over the next 12 to 18 months. The Swiss, I'm not too confident about. I could still see the Swiss losing value. However, in the short to medium term, the dollar needs to find some sort of ground first before we can start looking to buy the dollar, because at the moment we're just smashing through all levels of support. There's no holding the dollar at the moment. It's like an unstoppable weight. So it just needs to find some ground, and then maybe we can see some bulls come into the market. But I was talking about this on my stream this morning. What I'm concerned about with the dollar at the moment is its historical price moves. So if we go into the weekly time frame and we just pull up, I've shown this before, but for anyone that wasn't here when I did show that, hold on, what date are we on? So we need to go 2016, 2017 here. So we just take all this price moves, and this was just before Trump came in 2015, up until the middle, or the start of Trump in 2017. And we line it up like this. We're seeing almost the same price action. So if we're going to look at a historical move, we still have, how much is this? We've still got almost, another 8.5% or 8% to go down, roughly. Now, of course, again, that's going off historical moves. We'll have to see how the market drivers go and how the economic landscape develops. But it's something to keep in mind, something to pay attention to. So I'm not really looking to buy the dollar at the moment. I'm actually pretty dollar flat. I'm still in silver position longs, but that's it. I've got no other exposure to the dollar right now. So yeah, it kind of wipes out any dollar cross, because I was very, very bullish on the dollar during this period, as many of you will remember me going short euro dollar for 3 or 4 months straight. That narrative is gone. It's completely out of the window now. So if we look at euro dollar, huge run up. If we're looking at key market levels, it's broken past 106 ages ago. Actually, well, I say ages ago, it was yesterday. But yeah, 106 was just blown right through. I was expecting 106 actually to be some sort of resistance, or to at least put up a fight, and it didn't. So that's a little bit of a concern to me. It tells me that the bulls are in complete control. I mean, we can see that as well with the candles. It's just, you know, non-stop upside. Next stopping point, in my view, is at 108. So if we get 108 and we see some sort of bearish reaction on euro dollar, that might be a sign we could see a little pullback or a small reversion. But again, I'm not going to be the guy to try and time that at this point. New Zealand dollar Swiss. I don't really see anything on New Zealand dollar Swiss. I think both currencies are pretty weak at the moment. Long term, I could actually see some upside. Again, I'm expecting the Swiss to lose value over the sort of next 1 to 2 years. But short term, there is nothing here. New Zealand's very clearly taking a hit against the Swiss. I mean, let's put this on the monthly time frame. I mean, for when was this, 2010 to current, it's lost 38%, or it's gone down by 38%, and it's a very, very simple, clean downtrend. So I'm not going to be trying to buy this, to be honest. But yeah, I think if anything, I'd be looking for a pullback here in the short term. So let's just pull a fib out. So here, so if we look for a fib pullback, where's my box gone? Here. So if we look for a 0.618 pullback to a 0.5 pullback, it does line up slightly with some previous structure. So it could be a quite nice resistance level. So we could go in for a sell, take profit down at the fib extension, something like this. And again, following the larger term or the longer term trend. But yeah, it's not something I would take. Again, I just don't see anything that would really make me inclined to the market. Hold on, guys. I'm just trying to catch up with the chat. It seems quite active today. Okay, here we go. Anyone looking to get the pound at 50% of the day failing ADP? Oh, my ADP's pretty lackluster, to be honest. It's not a huge market driver. I wouldn't be taking trades based on ADP. If you're wanting to trade, take an event trade, you're best waiting until Friday when we've got unemployment and NFP. We've also got Powell speech as well. I think it's Powell speech later on Friday. Gold. Okay, we can have a look at gold. I'm still, as I've been saying, I'm still bullish on the metals. Actually, hold on, let me pull it up here. The Edge Finder has got gold reading very bullish again. It's weird. Gold and silver are really fluctuating on the Edge Finder at the moment. But on average, gold is still reading as very bullish. So let me just log in here. Okay, whatever. Either way, we'll just skip over that. But yeah, gold is reading bullish on the Edge Finder, so that gives us a nice signal to potentially look for long positions. The trend is remaining bullish, and I was saying this. I was saying this. I think it was last week. There was so many people trying to short gold, and obviously some will have made money. I'm not saying it was a terrible, unprofitable idea. I'm just saying, generally speaking, it was very, very optimistic or even pessimistic to be trying to sell gold here. Now, obviously, we got a dip, but the overall market trend since 2023 or the Q4 2023 has just been upside. Yes, we've had small pullbacks, but trying to fight the trend is always a dangerous move. So there's no chance I'm looking to short gold. In terms of going long, hold on. Where would I want to go long? I think I'd just be waiting for some sort of pullback. This may be valid as well, somewhere around here. Take a long position off the fib, as we always do. Take profit. I would actually aim for around 3,000 at this point. Again, we are in a risk-off market, it seems. So it seems like a very straightforward trade. So yeah, I'm looking to go long on gold at some point if I can see an entry. Guys, I just lost $372 today, $170 actual amount, and the other was earned through profit. I'm feeling low now. That's unfortunate, R. Patel, but it's the way of trading. If you, you know, if you've lost profit as well as actual capital, it sounds like you've either need to work on the risk to reward or you need to work on risk management. It's one of those two problems though. Adding to gold short, this wave should take us down to 2840s. Ball out. We're going to have one of our agree to disagree moments here, I think. Give you wise words. I'll give you some words. Yeah, Arpsal, I don't really have anything for you, to be honest. If your problem sounds very temporary, you know, I'll be very honest. $370. It's not like you lost your life savings. I hope that's not your life savings. Generally speaking, that's not a large amount of money. You should be able to get that back. Whether it take you a month, 2 months, it should be fine. Just use it as a learning lesson. It's natural to feel down after a loss. Most people do. Even I get frustrated after a loss sometimes, you know, it's normal. We're human. But again, as long as you learn from the loss and you don't make an emotional trade based on the loss, it's fine. Take a break. It's almost Friday, so halfway through the week. So just take the rest of the week off. Feeling behind on life. Well, you know, if you're feeling behind, you need to do more. You need to write down where you want to be in the next year, 2 years, 3 years, 4 years, 5 years. You need to write down how you're going to get there. Every step, every problem you may encounter, plan for everything, and just do it. Problem is, a lot of people have this mentality of, oh, I'm behind in life, but they don't do anything. They're sat procrastinating, being stagnant all the time. And 20 years later, they're in the same place, in the same country, same town. Anyway, what do you think about copper? I don't know. Copper's, again, it's not something I trade very much of, but from what I have seen or what I have heard about copper, it sounds bearish. But again, don't quote me on that. It's not my thing. Let me. Yeah, I don't have any research for copper actually. I don't think. I don't. Yeah, I don't know in terms of the drivers for copper, but from a technical view, it obviously looks very bullish. So I actually wouldn't look to go short. Just give me a second. Let me have a little think. I suppose we're kind of stuck in a range here on copper, really. So in my view, you would need to really wait for a break of either side. So a downside break or upside break. You know, that's it's very rudimentary, saying it could go up or down. So yeah, that's all I've got for you. I'm not going to sit here and try and make myself sound smart. I lost on euro dollar and dollar Swiss, held through Swiss yen, and we're back to business on that one. Yeah, Alan, it's been very tricky. I'm currently stuck in some euro Australian shorts, which I'll show you here. So this one, which is fine because I cut 2 positions off just to reduce the risk. But I'm looking basically for a mean reversion here. I think the euro's relatively bullish, actually. I'm not necessarily super bearish on it anymore, but just from market behavior, this market's overbought. It's very, very extended. And it looks like it's due for a pullback. Remember, the way I view the markets, and this is just, again, it's my view, G10 pairs, specifically G10, are like elastic bands. They can stretch, and they can stretch, and then eventually they will snap back. It might take time, could be tomorrow, could be next week, could be next month, I don't know, but mean reversions are very profitable if you can do them properly. James, do you think it's best to get in yen bullish when the Bank of Japan hike rates? No, Jack, that's probably the worst time to do it because that's likely when we're actually going to see profit taking. what you've got to remember with interest rates, they get priced in way before. So the markets expect and have priced in one interest rate hike this year, and that's it from the Bank of Japan. So likely when or if we get that hike, we'll actually see people getting out of the yen. But of course, we need to wait for some forward guidance. I'm just catching up on the chat. Sorry, give me a minute. Yeah, Patel, it's just a trade. Just move on. There'll be plenty more of them to come. Yeah, no problem, Lee. But again, I've got really no idea on what the drivers actually offer for copper. So don't take my word for it. Do your own research as always. Yeah, I don't really have much on my watch list. It's kind of been scrapped actually. So I was looking at UK 100, kind of scrapped that idea. Dollar Swiss is scrapped. CAD Yen, I still really like CAD Yen shorts, but I don't have an entry at the minute. So I'd love to see some sort of pullback here. So let's just redraw this. So we've got support level here. So it's more a case of me waiting. Are we going to see some sort of rejection, some pullback here, or are we going to break through, retest, and continue down? Either way, I'm happy to get into the market, but right now it's just a little bit too soon. So just waiting on that one. Dollar CAD. I liked the idea for dollar CAD, but I'm just not gonna take that risk at the minute with the dollar falling off a cliff. It's kind of a trade idea I've scrapped. Euro pound, I really like euro pound actually. I'd be quite happy to go short. Now, the typical behavior of euro pound is actually very, very simple. We very often have an aggressive move. So here, you see really aggressive upside, aggressive upside, aggressive upside, aggressive upside. It's not a market that tends to follow traditional technical analysis very well. Which is why I like the dollar cost averages so much, because although it has these really aggressive moves and they can be a bit ugly at times, if you can manage the risk properly, we tend to revert back very, very nicely and pretty quickly as well, actually, most of the time. So once the euro starts to, or if the euro starts to signal that it's running out of steam, I might look to go short on euro pound. I'm not bullish on dollar anymore, Bashi. I was cautious to bullish or neutral to bullish, I think last week or the week before, but that's been completely wiped out now. Is Elite Traders a couple of traders or just James? It's a couple of traders ball out. So we've just hired a new trader actually. So there's me, but I do more of the background work. I obviously run the company and do all the back end stuff. We've got a regulated Series 7 and Series 65 trader. We've got university economics and finance analyst. And we've just hired another trader that was, I think he was mentored by Anton Creel, as far as I am aware. I need to double check that, but yeah. Aviation, kind of. So when we get data in the markets, so we can get obviously sort of a drip feed of data. So it could be inflation, we've got the labor market, we obviously get these news flows in. All of those news flows will help positioning and sort of the idea of what the central bank will do. And that's how it starts getting priced in. So when we actually get the decision, likely, unless the decision is completely off from what the market was expecting. So for example, if we're expecting a 25 basis point cut and we get a 50 basis point cut or even a hike, the markets will obviously need to reprice, and that's when we see volatility. But if it comes in line, so if we're expecting a 25 basis point cut, we get the 25 basis point cut, it's muted, and we can likely see the market actually go the opposite way as we see some positions get closed. Obviously, that's more of a blanket statement. You might see deviations from that. Can you explain what ISM means for the market, how it impacts markets fundamentally, how it's linked to dollar, metals? Yeah, ISM, we have manufacturing and services. So it essentially says, is the US contracting or expanding? So if we get services, actually, let me just pull up services so I can just reference it here. So we actually got services pretty soon in about 20 minutes. So services ISM services PMI. So the previous reading was at 49.7. Forecast is exactly the same at 49.7. The general rule, oh, sorry, that was the wrong one. Previous was 52.8. Forecast is 52.5. So the general rule for services and manufacturing is if it comes in above 50, it's positive, it means expansion. If it comes in below 50, it's negative, it means contraction. So that's sort of, less services being provided, essentially. Jack, I don't trade sessions. I don't care what session I'm in. I will place the trade. I don't care if it's Asia. If there's no session, I just pay absolutely no attention to that. When you're a sort of a longer term trader, sort of swing trading, sessions are kind of not really relevant. I'd like to think the edge finder is delayed in scoring. Most retail traders, is there delayed? Maybe, yeah. Really no idea, but I'd assume there is a delay at some amount of time there. What is interesting though? Pound dollar is the most bullish reading on the edge finder at the moment, which again, it's a complete flip really from what the markets have been doing. So it might be time to start positioning long on a lot of these dollar crosses. So the approach really is wait for a pullback. I mean, look at this move on the dollar. It's just crumbling. It's beautiful. Well, it's beautiful for my silver position. But what I would need to see to actually go short on the dollar is weaker data. So I don't know, let's say NFP comes in poor. I need to see some sort of pullback with the addition of weak data. Then I would start positioning to go short on the dollar. But until then, I don't want to short the current move because it's just too aggressive. I think it would more be FOMO trying to get into this right now. James, do I sleep? Yeah, I sleep well. I just don't care what session I'm in. So, I come to the charts at 11 a.m., fine. If there's trade at 1 a.m., fine. I really don't care. If I've held a trade for 2 weeks, do you think I'm going to look back and say, I should have waited for London Open, or I should have waited for the first candle of London session or New York session? No, I don't care. My estimate on gold, I'm not willing to give an estimate right now because the markets are in the air. I really am unconfident, let's say, in the market dynamics right now. I would say gold to at least 3,000 pretty soon. But yeah, we'll see. It seems like the trade wars are bringing up some steam and risk off. So yeah, I'm quite happy to say 3,000, but it's beyond there, I'm not too sure yet. Dollar yen's tanking down. Yeah, I was looking at dollar yen as well. I'm actually, was waiting for this break, but yeah, I just need to see it sort of confirm, close below. Then if we can get a retest, that would be beautiful, and that would sort of set me up for the next couple of weeks, really, on a short dollar yen trade. Can you explain the concept? I mean, a micro strategy. Do you mean the company? Do you mean like an actual trading strategy, or have you mistyped that and mean macro strategy? I'm actually not sure what a micro strategy would consist of. I trade a macro strategy. So a macro strategy is basically what Nick trades as well. So when you have a macro strategy, it's essentially looking at data trends. So you could say NFP's been decreasing, unemployment's increasing. We're having a weaker labor market. We've had a weaker labor market for the past 6 months. Dollar's weaker. So I'm going to start looking to short the dollar. So you're looking at macroeconomics to build a trade idea. Micro strategy is essentially just buying every bit of Bitcoin you can. I was referring to the micro strategy company. James, do a massive favor. Add 1 minute to your time frame. You don't need to use it. I just feel left out. Bash, that's what your charts are for, my friend. James, are you playing undercover? I went to your channel. Now you have a clickbait time to sell gold. We secretly agree. Yeah, well, this is the thing, Ball. If gold goes up, I can say I was right. And if it goes down, I can say I was right. What I'm doing is it's just social engineering. It's just smart marketing, really. No, I'm joking. It's just a clickbait thumbnail. When do you think Euro AUD will reverse? I think it will reverse when it reverses. I don't know when. I'm short, so hopefully soon. I'm looking, it's kind of in the final area now. So this sort of area here is where I'm looking to either scale into a short, and if it breaks above, then I'll be getting out of the position completely and scrapping the trade. But yeah, I think a reversion is coming soon. But again, this is just the way I'm trading it. Do your own research, trade how you trade. No, macro strategy isn't the time frame you trade. Macro is the time frame of the economics. So you could do macro economic analysis and just take a day trade, or you could do macroeconomics and take a position trade. When you're talking about macroeconomic or macro strategy, it's more referring to the time frame or the seriousness of the economics you're paying attention to. Because what you will see is if you look at a lot of funds, and it actually, what's interesting is at the seminar I did in Madrid, I actually did a segment on this. So you can feel it's recorded, it's on my YouTube channel. You can go watch it if you want. But there's a lot of funds that do macro strategies, and it's essentially what we do, or what me and Nick do in terms of taking the global macro and applying it on the charts. Obviously, they trade it differently. I'm not saying they use the same indicators and support and resistance that we do, but the concept is the same. Sean, can you demonstrate DCA like strategy on the 1 minute utilizing ICT concepts, unicorns, or MMXM, please? And thanks. Yeah, but you're gonna have to buy my course for that, Sean. Because the reason is, I need your money, please. Not gonna lie, EA really did the opposite of what I thought based on the Edge Finder. Yeah, well, that's what you got to prepare for. The markets are a cruel beast sometimes. Too much greed in OSL is killing me. What should I do? Close the trade, learn from your mistake. There is nothing else you can do. You have no other option. And every time you're going to do the same thing, just think of the pain you're in now and be like, am I going to inflict myself on that as well? The problem is what a lot of traders do, especially new traders, is they'll look at the trade, they'll be like, oh, I could make $500 off this, or I could make $1,000 off this, I could make $10,000 off this. But they don't account for the downside. They're not thinking, if this doesn't work, I'm going to lose this much. They'll just assume it's going to work. They see the big number that they could get, and don't plan on what they're going to do for the downside. Ball out, that's very true. A lot of the money these traders lose in the markets could actually just be saved and put into a mentor. But, it's not as fun. Everyone likes to put a gamble in the markets. It's not fun to actually invest in your education. That's not cool. Guys, chill. I told my parents about trading the other day. My dad asked if I'm making money. I replied, if you ever see me vlogging and tell people how to buy my courses with Lambos, you'll know I did. Yeah. The less people you tell about your business, the better, including your parents and friends. James, from your talking, I can see you are what I call a minimalist. Low expenses, enjoy life, productive kind of person, right? Yes, exactly. I value freedom over anything else. Yeah, I could make average salary. I'd be happy on, well, not happy, but I could live off, $1,500, $2,000 a month, as long as I have freedom to do what I want to do. It really doesn't bother me about too much stuff. I was in gold long for today. Why did it erode bearish? Jack, that's exactly it. I mean, it's a little bit hard for me to be completely silent because obviously I run a company, and a lot of that requires me being on social media. But in terms of your personal life, staying silent, don't tell people what you're doing, don't post stories. Oh, I've just taken this trade, I could make blah blah blah, or I just closed this trade for 10K. No one cares. No one cares what you're doing, and if they do care, it's more than likely for a negative reason. Trust me. It's cool at the start when you earn your first big money and you want to show people and you want to flex it. It's understandable, but it never, ever will bring you any benefit. You might get some people from, your old life, your old high school. Can you teach me? How did you do it? And that feels cool. Don't get me wrong, it feels nice, but it's not actually any benefit to you unless they're going to pay you tens of thousands to teach them, which they probably won't. Jack, how's my Swiss yen? I feel like this stream is life lessons with James. It's James's. Maybe I should start a podcast. This is my Swiss yen trade. So very uneventful. We had a little spike up today, and now we had a little spike up yesterday, and today we're coming back down. But we're still in this range, so there's absolutely nothing to do as before, unfortunately. Too much noise like Bashi's race cars. Royal trades, that's exactly it, yeah. Our law, yes, we do. I don't trade Bitcoin, but we do have crypto guys in our Discord, and the trader that I spoke about earlier trades Bitcoin as well. So if you're interested in crypto, you can still join. It's just I won't be involved in that conversation. James, tell us something wise. Regarding what? Managing around 15 coin spot at the moment is tough times. Yeah, no problem. I assume you mean 15 Bitcoins. Yeah, I mean, I'm not going to say anything. Again, I'm not a crypto guy, but we do have someone in there that could talk to you about that. Your cat's misbehaving. What should I do? You need to sit your cat down and you need to tell him to watch a video of Jordan Peterson about making his bed and getting some discipline. I think that would benefit your cat's behavioral problems. You bought Euro USD at 101. That is a great entry, actually. Slow burn, very nice. "12 rules for life." Rule number 1: make as much money as you can. Rule number 2 is refer to rule number 1. James, how do you participate in the stock market? Kaidos, I think if you look in the description of this stream, I'm fairly sure Nick has a link to Webull, and I'm fairly sure you can do it through them. I don't trade stocks, but I know Nick and A1 Trading do, so I think they've got something in the description for you. So you could get Webull, and then you can get the stock box. And I think you can use code ELITE for the stock box if you want to, be ahead of the markets and get top-notch stock insights. Which is stock, for anyone that doesn't know, stock box is the edge finder, but for stocks, not currencies. So far, so good. Stocks are too emotional. Yeah, I don't like stocks. I'm invested in the S&P, and that's it. I don't look at stocks. Don't care about stocks. I've got absolutely no interest. It's just adding another layer of complexity onto my analysis. Anyway, we've kind of gone off the deep end there, haven't we? What were we actually doing? Dollar yen is actually the most bearish currency on the edge finder. Oh, sorry, bearish currency pair on the edge finder at the moment. Platinum's bearish, Russell's bearish. What else do we have that's interesting? Not too much. We've got still a very European market actually at the moment. So we've got the pound bullish. We've got the euro actually reading bullish as well now. We've got the UK 100. We've got the DAX, all European. So very interesting stuff. Do you not regret longing EU and GU? No, of course not. Why would I regret not doing something? I could I could do the same thing with anything. I could say, I regret not going short Swiss yen right here, or I regret not buying Euro New Zealand down here. You can't look at the markets like that. Yeah, regrets for losers.
Hey, James.
Oh, hey, Nick.
How's it going, man?
Yeah, good. How are you?
I'm good. I was saying this earlier. As baffled as you are with the whole pound dollar showing up on the edge finder.
Oh, good. I was thinking when I was saying that, I was like, "Ooh, he's Nick laughing at me in the background."
No, and I also have to come on here and what else can I do than defend the edge finder? I saw some people saying, "Oh, the edge finder's delayed and lagging." And look, just so we're all clear, and James, I know you vouch for this too, because I know with your style, you're looking at all these things, but you're not looking for something to tell you when to buy, when to sell, no effort, just full port my account, and if it goes up, great, I made a bunch of money, it was the tool. Look, the edge finder and any analysis that you do, this is broader than just edge finder. Whatever your theory on the market is, right? If you think certain things are going to be bullish, certain things are going to be bearish, you said it earlier really well. Like, the market can be so crazy and can do exactly opposite of what everybody thinks sometimes. And that's just the whole nature of it, right? If it was more predictable than that, then why don't all your neighbors do it, right? Why doesn't everybody do trading? If it's so easy to, call, then why doesn't everybody do it? The answer is because you can have a great educated guess on something and still it not work out. But, James, I said it earlier on the stream. I went on a rant about just being systematic this year. And for me, what that means is just like, look, the UK data, I think that this new heat map helps us out a little bit with you and I's reaction. It's like, okay, 0.4 GDP growth, that's not great. Manufacturing PMIs are still well below 50. That's not great. Services PMIs are positive, above 50. Retail sales, decently strong. But CPI is still sticky. PPI, still rising. Unemployment rate is decent, and employment change is decent. But I think the thing that we have to kind of recognize with what the edge finder is scouting out here is, simply put, everybody expected the UK economy to be garbage, and it came in as less garbage than garbage, if that makes sense. That's kind of the theory here that I think is interesting. But same to you, I didn't take any of the pound ideas, and now I'm just being like, this is why I need to stay systematic, because sometimes the system just points something that goes against my gut feeling, and it's like, if I can find the right trade, I should just take it. I shouldn't. But again, just to answer some of the comments earlier about like, oh, well, the edge finder is just a delayed system. Well, the edge finder, as you put it, is just a data screener. It just scans, and Ball Out, I think in the chat said this too. It's a data screener. It's not a buy the market this morning and you'll have profit by this afternoon. That would be nice, but nothing like that exists. It's simply a scanner. So am I super long-term bullish the pound? No, but my system, everything is a little bit upbeat for the UK compared to what was forecast. It doesn't mean it's all rosy from here. I think the UK has some long-standing problems that you and I have talked about for, a while. But maybe short-term, there's a little bit of an upbeat, a little bit of a short-term uptrend off all this dollar weakness.
Yeah. So the other factor that we were discussing this morning is the central bank divergence, which we makes sense really because we've got sticky inflation in the UK. So it's now expected the Fed will be cutting roughly 75 basis points this year. I think the Bank of England is expected at 50. So we do have that slight divergence on the cuttings, which is slightly beneficial, but I don't think that warrants the move we've had.
Yeah, and I mean, again, I've been pretty shocked just to see pound pairs have not gotten, this kind of excitement on the Edge Finder in a long time. And again, I've been making the mistake over and over of not being systematic enough. Look, it showed up, and I didn't look at it close enough. And sure enough, that was the one. Some of the pound pairs took off running. So, anyways, James, we've got just about 30 seconds here to go before. I mean, this is huge. We've done services PMIs together for quite a while. It typically falls on a day that you're on the stream, and I join back with you. Services PMIs this time around, I just want to give a warning to everybody. You're probably going to see some good volatility if there's any divergence from expectations here. Stocks, gold, everything is likely to move here as we go into our breaking news coming in just a second. All right. Services PMI, let's see what we get. Okay, an initial slightly move higher here. Dollar index mixed.
53.5.
Okay, so slightly better than expected. We'll see if that can save the day a little bit here for kind of the dollar sell-off that we're seeing. Dipping here lower. Again, that's following this morning's weak ADP numbers. So we'll see. James, what do you think about the dollar? Are you feeling neutral, mixed, bullish, bearish? How do you feel about it?
It's very, very difficult to be bullish at the moment. I generally stand bullish with the dollar because it is very, in the grand scheme of things, in the very long term, it is very stable. But right now, with the way it's moving, I cannot find it in myself to really be a bull at the moment. We've just broken level after level. The data isn't great. At least it's not what it was. The investors seem to be trying to tell Trump that they're not very happy about the tariff war. So I'm not bearish. I'm not going to sell the dollar at the moment, but I'm also not going to buy it. I'm more very cautious at the moment. So sitting on the sidelines.
Yeah, dollar index. I mean, from a price action perspective, I saw you talking about earlier. You had just kind of this washout sell-off, bit of kind of a big old head and shoulders pattern kind of looking thing here. Even retesting this really key support right around 107.5 and just tanking off a cliff here at this moment. We'll see if that if we catch a bounce here. I mean, we're kind of sitting at a longer term level of support here around about 104.5. Dollar index falling, of course, is positive here for metals. I heard you say you're in a silver trade. That's awesome. 1.3% for silver today.
Are you still in the gold trade? I saw you took a gold long. Are you still there?
I am. I'm long gold.
Ah, nice.
I'm long gold. I'm long TLT. And I know you don't love stocks, but I'm also watching a couple stocks that I'm looking to buy on the dip. So I've got, I've got stuff going. In terms of currencies, I'm still long the yen. That has been overall a really good trade, although Swiss yen specifically has held up a little bit better than some of the other currencies in terms of, avoiding falling off. Like if you take a look at like Australian yen or like CAD yen, these things have gotten killed compared to Swiss yen, which is, for me is fine. I'm not really, this is not a short-term trade for me. I think you're in the same camp. Like it's more of like a, longer term theme. I think that the Japanese heat map says a lot about this. I've been just loving these things, man. I'm using them all the time. The heat map just makes it so much easier for me to understand this stuff. And well, not understand it, but to explain it to others and also at a glance understand it myself.
Yeah,
You have
it
high
streamlines the
inflation.
process.
Yeah, I mean, you have hot inflation, you have manufacturing PMIs, services PMIs upbeat for Japan. I just feel like, James, we've talked about this, like for a stretch there, it was like dollar bullishness was pretty easy because you just had all blue on the US economic heat map. And then when it mixed, that was a signal to kind of, roll out a little bit. You went long silver. I mean, it's a great concept there for the same reason. Right now, I feel like until that changes for the Japanese economic heat map, I still like the yen.
Yeah, I think the yen's a great play, but yeah, as you said, it's more of a long-term idea. I've had a few people talk about the yen, like, oh, I was taken out yesterday on Swiss yen.
Okay.
And I've been trying to be very clear. I'm not looking for a day trade. It's not a swing trade. It is something I'm looking to hold for the next, 6, 12, 18 months if I need to. So for anyone that is watching this and, you're hearing us talking about yen long, just, do your own research, make sure it fits you. Don't just follow blindly, because if you're taking a trade idea like this, and we're talking about the next 12 months, if you have a couple of days where you have counter moves and you've got low capital, that can be very detrimental to your equity. So yeah, just do your own research.
James, I watched, it's probably one of my favorite Forex videos. I've watched this video like probably 10 times. Do you know who Rob Booker is? Do you know that name?
I've heard the name. I'm not sure who he is though.
Rob Booker. He's someone who I've loved watching his content for years. He has retired since, but in the last few years, but he has this one video. Maybe I'll send it to you. It's how to trade like a bank, but it's like actually how to trade like a bank. You always hear people talk about that, like, oh, and the video is just them drawing sense. Like it's like that's not trading. He talks about trading like a bank because he's actually been on the floor and at the desk where there's bank traders, and what they do, is they inventory currency, indices, commodities, and they just turn over their inventory over time. So like, for example, I mean, these are also market makers. These are people, who have clients that they call up. So like, I just love that concept. But let's just say, as an example, we're talking yen for a second. Let's say that your job at the firm is essentially to accumulate yen and then sell it when you get a chance, and do that over and over and over. And what that would look like would be, okay, I'm going to sell a little yen here, or buy the yen here by shorting Swiss, buying yen, right? That's if you're buying yen, you're shorting this pair. That's the idea, right? So, okay, so I accumulate some yen longs here, and then the market keeps going. Okay, great. I can actually build up my inventory a little bit, and then build up. This is the concept of dollar cost averaging. And I also interviewed the author of Inventory Trading. His name's Sean Campbell. He's a video on my channel, and he talks about this concept too. It's this theory that, if you want to trade like a quote unquote bank, accumulating the other side of the trend followers very slowly, bits and pieces, and then offloading it to people when they get excited about the new trend that's forming. It's an interesting concept. I mean, it's very contrarian, it's very counter trend, very dollar cost averaging focus, but I just thought about it in context to our discussions about the Japanese yen. Look, I like yen for the longer term. I think that it has potential to be strong. That may change, but right now that's my perspective. So, you give me these opportunities to essentially buy yen at a discount. I can accumulate some more at these levels, average up my cost, and eventually offload it to the next guy. So, one of my favorite videos. I might have to send that to you.
Yeah, no, do it. It sounds very similar to what I'm doing on the Euro Australian at the moment, actually, because we've got. Hold on, let me just pull it up here.
Are you short Euro Aussie or long?
Yeah, just completely fading this move. It's not a economic trade. It's purely just looking for the reversion, accumulating short positions.
Euro Aussie has a special place in my heart as a nightmarish experience for me in 2020. When in 2020 Euro Aussie, I was on the wrong side of this move, and it was one of the ugliest drawdowns I ever had in my trading experience. I came out okay, but it was the true testament to small positioning size. I had tiny position size, and this move still sucked. So, I was dollar cost averaging against the Euro Aussie move because in 2020, what ultimately, to be completely transparent, I made a lot of money in 2020 buying a lot of stuff that I thought was oversold. And it bounced back, specifically like Tesla stock. I made a lot of money on Tesla stock during that time. But before I made a lot of money, holy crap, did my butt get kicked by Euro Aussie. I was short this thing and shorting it and shorting it and shorting it, small size. And even with small size, this was agonizing. I had a massive drawdown. I think I had a 35% drawdown on my account with tiny positions. And I was like, what is going on? It eventually came back, but, that was one of the most freak moves that I've ever seen in a currency pair. That peak to trough was a 23% difference and a 3,700 pip move, let's call it, in just a few months. So nasty move. Yeah. But
that's brutal.
A testament to small positions. Holy crap.
Yeah, no, absolutely. That's another thing with dollar cost averaging. It's not. It sounds, on the surface, and when it works smoothly and there's no real problems, it looks like the easiest way to make money in the markets. And sure, yeah, it can be for a short period of time. But then you'll have something like what you just showed, and like what I'm going through now. Actually, I've already cut 2 positions for a loss on this one. So any mismanagement, one step wrong, your account can very easily get blown up.
Well, I mean, I think I was doing 0.05 lots per trade. Like 0.05, which is not huge, just 0.05, 0.05, 0.05. And I was adding into the move dollar cost averaging up. And like I was short, right? So I was just shorting it. And then I was short a little bit more, short a little bit more. And it was like, even with a small size, it got very ugly. So it's like, that's the thing about dollar cost averaging is take what you think is a small size and make it smaller, because otherwise, the freak moves can wipe you out. So it's, it's not for everybody. And that video that I mentioned with Rob Booker, specifically, that's what he says. He's like, this, you think you want to trade like a bank until you realize that it's not very glamorous, not very exciting. It's, very agonizingly slow at times and also agonizingly painful to sit through some of the drawdowns.
Oh, absolutely. Yeah, definitely.
Yeah.
So I think, the plan really is just to keep shorting for a while. If we breach the previous high, the wick from August 2024, I'll just have to realize the loss to mitigate risk. But for now, it looks okay. And realistically, and this is famous last words, but I just don't see it continuing that much higher. And again, this is only for just positioning for a short-term mean reversion. This isn't, again, it's not a macroeconomic trade or a long trade thesis or anything. It's more just a see what we can get. If it doesn't work, it doesn't work. No big deal.
Yeah. I mean, that's the thing is I have a new trade on the dollar cost averaging side, specifically Euro Aussie. I'm sorry, not Euro Aussie, Euro Pound. Based on what we were saying earlier, you can see already timing this one was awful. I shorted this thing and it just erupted through here. But again, testament to very small size. Can I turn this? No, I can't. Dang, that's going to annoy me. I entered right around here, my first position. I have willingness to add, so I'm potentially going to add here, potentially going to add here to my Euro Pound short position. Longer term, I think I think the Euro's in a tough spot with the trade war stuff, and we'll see. But I'm going to take that position kind of longer term, and also just very slowly, as always. Dollar cost averaging, just very, very tiny size per trade.
Yeah, I mentioned this earlier in the stream actually, but Euro Pound has a tendency to do this, where it has a very aggressive move, and then it's very quick. It might take a little bit of time, but then when it does eventually have that fall can be very quick and very profitable as well. But obviously, to get that, you need to be adding into these types of horrible moves. Obviously, they look horrible at the time. In hindsight, they're fine. But yeah, it takes some guts to be able to do it. And I'm looking at doing the very similar thing actually on Euro Pound soon.
Well, if you do get in and it rolls over, I'll be annoyed because you got a better entry than I did. I'm just kidding. To be honest, like I have, again, my small size, it's almost so small that I don't even feel it. And I take the first trade and I'm like, want it to go against me. I know you've said that sort of thing before too. Like I want euro pound to move a little bit higher. Let me get in at some better prices and then drop. That'd be great, right? So, you know, am I worried about this position at all? No, I'm actually very glad to see this thing up today after my entry, because again, that gives me the room to potentially add some shorts and accumulate short positions at prices that I think are better. Like if you know, this is an area I'd really like to get short. If I can get that move up there, great. I'll look to just kind of fade that. And you'll notice for stream listeners that this is a very different style than when I'm talking about gold or when I'm talking about the NASDAQ. I trade those things on a momentum basis. And where I think James and I overlap very well is that we approach Forex with the dollar cost averaging approach due to look at this chart. Okay. And then you look at this chart. They don't behave the same way, right? You don't want to short NASDAQ when it's going up and up and up, right? The thing trends like a beast. You want to, in this, you know, you do what you want. But for me, I trade a momentum trading style and trail stops on indices, gold, commodities with a fundamental overlap. Like that's the most important part for me, is it's got to fundamentally be there. But then when it comes to currencies, you know, look at euro pound and you scroll out and you're like, okay, this thing, it goes nowhere over the long term. And if you have the proper size, you can survive 99% of the moves, no problem. And then the 1% is really the test of your sizing. Again, you can survive even the worst things if your sizing is appropriately. But yeah, I mean, over the long term, these things typically do chop sideways, and you're just able to cash in profits throughout the, you know, their approach. You know, James, you use a dollar cost averaging approach in Forex. I use a dollar cost averaging approach in Forex, and so does Chris Pulver. So I feel like, you know, that's three decently, at least we might all be idiots, but I think it's a decent approach to the FX world.
It is. And that's the thing. It's like you said, they don't behave the same. So equities, commodities, and maybe even stock, again, I'm not a stock trader, I don't know, but they tend to be able to trend for a long period of time. So if you are trying to get mean reversions or dollar cost average and you're against that move, you're pretty much done for, unless you can get out or something. But
on
G10,
stocks, sorry to cut you off. One thought I just had with stocks. Interestingly, stocks on average, you know, have the drift up effect. Where I would say the mean reversion really applies to stocks is not necessarily in price per se, but in relative performance. I think that is very true. Like, so for example, just a quick thought, NVIDIA has had massive outperformance to the stock market in the last 10 years. The mean reversion that I would see there is that over time, I would actually think that NVIDIA is probably not likely to massively outperform at the same level. The mean reversion was like, maybe it comes more in line with the market's returns, or it even underperforms the market. Still means it's going up over the long term, but that mean reversion that you're talking about that isn't present in markets, in Forex, I think we both love that concept that mean reversion equates to price just going back and forth, right? In stocks, I think it's all kind of like relative pegged to the index performance.
Yeah, exactly. So for anyone that doesn't fully understand that, the reason specifically G10 currency pairs work so well is because, sure, we might have downturns in economies, like recently we had euro dollar just fall off a cliff, but it's not long term. You know, you will eventually see these economies pull back into either a better position or a better position relative to a different currency.
Sure.
So you can play almost like ping pong with the market. Again, that's simplifying it massively, but that's the idea.
No, I mean, that's true. I mean, think about, like, I like to think about this. You what you're describing, I would call is like a central bank put, if you will, where right now the crypto world, a comparable example is Trump puts. So in the crypto world, there's this theory right now that crypto can only go down so far because there's a Trump put. Basically, he will step in and he's the insurance, right? Buying puts is like insurance. So the Trump put is the insurance policy. Same thing with the stock market. There's this idea that there's a Fed put and a Trump put. If it goes down too much, it'll get their attention and they'll step in and do something. And with currencies, as you're pointing out, euro, US dollar, if it goes too far one way, or what we've seen recently, dollar yen, when it goes too far one way, forces come into play that are like, no, we need to change that back. And a lot of effort goes. Now, doesn't mean they have to change right back immediately. But what you're describing, I think, is really, really wise, because there is such thing as kind of like a exchange rate puts one way or the other. Like if they go too far, both countries are like, no, we got to work together to get that back.
Yeah, exactly. Last thing I'll say, I know we're running into Chris Pulver's time here, but this, as far as I'm concerned, I would never do this on exotics or emerging markets. So, for example, if you tried to take what we've said today and you go into USD try, it doesn't work because it's just upside. So that's why previously I mentioned on G10 currencies, because that's all I do. Because again, their economies are stable. We know what they're doing. Whereas, look at this, it'd be a nightmare. So emerging exotic markets aren't something I would ever touch.
That's a fair point. The idea breaks down when you get into kind of small economies that are not, part of the negotiation table to that extent, So it's really good stuff. I mean, some powerful conversations here as always, James. I appreciate your time coming on to the stream. For everybody who's been hanging out with us, if you've enjoyed James's commentary, support him, support the channel by making sure that you're subscribed to Forex James. I saw you hit, was it 3,000 subscribers, James? What are you at?
Almost at 2,500. The goal is to get to 5,000 by the end of the year. Okay.
Shout out to James. He's been working on his YouTube channel is like up and coming massively this year. You've made some awesome changes. You're streaming more often. I tune into his streams because he's up earlier than me, because he's in have you moved already?
Not yet. I'm moving next month.
Okay, yeah. You're moving to Indonesia, which is awesome. Very cool. So yeah. Also, James, that is your time on the streams going to be just chaotic? I mean, that's going to be a weird time shift, huh?
Yeah, I'll be nocturnal essentially. So I'll have to stick to European American times whilst in Asia. So
yeah, no, that's going to be an interesting thing. But anyways, James, thank you very much for your time today, sharing some ideas, sharing some wisdom, and we will see you on the next one.
Cool. Thanks, guys. See you later, Nick. See you.
See ya. All good stuff as always with James. Again, just the concept being slightly more attuned towards mean reversion in Forex, slightly more focused on trend following strategies in indices and commodities. I mean, gold here, we can talk about gold for a second. Also just curious, can we get a pulse check on the audience here? What do you guys trade? What's your primary thing? If you had to pick one chart for the rest of your life, what would you be trading? I always like to ask this periodically because it gives me an idea of who I'm speaking to. Usually it's like gold is number one, and then you have like people who like the NASDAQ, people who like currencies, S&P. So I'm just curious where we're looking today. NQ, gold, MNQ, S&P 500, Dow Jones. You guys know, I'm not going to lie. If you tell me you like indices, I automatically like you too, because indices are they're like my gold. How a lot of you guys feel about gold is how I feel about the NASDAQ. It's just a fun one to watch. NASDAQ, speaking of which, maybe not so fun to watch today, although I'm not long the NASDAQ. So I'm perfectly fine with it moving like this, but it is continuing its multi-day losing streak here. These bounces are getting faded. That's something that we have not seen in 2022. Some of you guys might not have been trading during that time, but if you trade the NASDAQ or watch the NASDAQ during 2022, this was the theme, man. Every single day. It was actually incredibly painful because I was long a lot of stuff. Sell-offs, bounces would show up, spikes up into the right. You're like, okay, we got something, and just the hope would just get eaten alive in the market, and by the end of the day, you'd close lower. It was like an over and over repeated thing. What I'm concerned about is you're seeing that type of behavior come into this market for the first time. I would say, in a very long time, right? Even in these recent sell-offs, the sharp bounce back were very aggressive, right? The sell-offs were short and sweet. The only other time you saw this was back in August, where you had the capitulation sell-off move into the end. And then before that, it really wasn't until 2022. But again, the NASDAQ can go down a lot longer than people ever think. So be very careful with this stuff. I am selectively buying the dip. We're going to pass the show over to Chris Pulver here. He's just arrived. Before he joins, let me just remind you guys, sale is ending on the Edge Finder. If you've been thinking about getting a copy, take advantage of all the different discounts that we have going on, or all the different tools that we have available with the current discount that's going on. You get the top setups algorithm, our sentiment indicators for retail traders, for institutional money. You can see what they're buying. You can see what they're selling. Seasonality, you can see all of that. Our economic data for US, UK, EU, Japan. Heads up, we are adding the Australian, the Canadian, the New Zealand, and the Switzerland economic data as well. This is just around the clock projects for us right now, but it is all coming, and it's coming as fast as possible for our traders using the Edge Finder. If you don't have a copy, now's a great chance to get it for 35% off. To take advantage of that discount, click the link being dropped in the chat right now. You can speak directly to our support team, or head over to a1trading.com/edgefinder to pick up your copy today. Start trading with the Edge Finder, start trading with fundamentals, sentiment, take your trading to the next level this year. Up next, to help you take it to the next level, we got the man, the myth, the legend, Chris Pulver, coming in just after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's up, everybody? Happy Wednesday. Welcome back. Hopefully going to see some profit here in the next few minutes on SPX. Just time is working out nicely. It's been a chop day. Got a couple of trades on earnings. Added some trades into the Pulver alerts yesterday. Selling some premium. Market, I'm taking stabs at selling premium. Let me see. I'll bring this up right here. Pretty simple strategy that I like to take advantage of when we have the volatility index, or the VIX, over 20. And let me bring that up right here. I showed this in, let's see. I showed this in some of my sessions this week. Let's go. Okay, give me 1 second to load this up. And let's go. There it is. All right. So this is what it looks like. Basically, when the VIX is over 20, I sell premium. Over the last 11 years that I can pull 1 minute option data, that's done pretty well. High win rate, almost 95%. Average winner and loser, I can tweak this with profit targets between 15 and 25%. I mean, I can just let it run, but I mean, we're compounding, and this is just simple one contract trading. This isn't anything crazy. But in the event that VIX is over 20, I'm willing to take up to 5 trades at a time. So this would be like, a Monday every week if the VIX is up, or every day, just kind of staggering out expirations between like a 40 and 50 and 60 expiration. But I mean, I would take an equity curve like that traded even through, 2020 was really the only real hiccup this strategy had. You're being opportunistic. You're not trading this thing all the time. Given the fact that we've had, how many trades? So you've got about 250 trading days a year. I've got 11. Actually, this is 12 years of data. So 12 years of data. So hypothetically, if we traded this thing every day, we have up to 3,000 trading days. This has only taken 725 trades, right? So you're only trading this. I don't know. It's a quarter of the time, right? It's still active, but it's just taking advantage of this when. Am I not sharing my screen here, guys? What's up? Here we go. anyway, it's just taking advantage of when the volatility index is high. Does it take max losers? Yes. Max loss would be during this COVID cycle. Other than that, doesn't lose a lot. And profit target is pretty solid. You can bump around this profit target where 15% is fine. 20% same thing. It just makes a little bit more money. 25% makes a little bit more money. What it requires you to do is, this is one thing that's kind of nuts about the strategy, is the average hold. Even though you are going out to a 40 to 50 day window, the average hold is only 4 days. That's what's crazy about this market. Like, when you think about what this volatility index does, right? I mean, we have seen now like steady volatility. This is not usual, right? So we had this big like outlier event during December. That was like one of the biggest single day increases ever. And then the same thing here in August. But to have this like slow and steady climb of volatility, I've got to wonder, right? I've got to wonder if this is slow and steady rally to either pop up and peak and then volatility comes back down. Okay. It wasn't that long ago where volatility back in 2022, when we were actually entering into a bear market, it was the NASDAQ peaked out in November 2021 and then started to tumble hard all of 2022. The S&P didn't peak until January 2022 and then spent the entire year, January to September, basically, in waves, moving its way down. But this was our volatility, in the 20s to 30s, 20s to 30s, 20s to 30s. That was a bear market. I don't think we're going into a bear market. I don't. Okay. I think this market needs a correction. It's getting a correction, and that's fine. But with this slow rise in volatility, fingers crossed that we don't have some big outlier event, and that's the peak in volatility, because that would be a crash, right? I mean, if we have a peak in volatility, we're going to have this like nasty, ugly capitulation move. I don't know what that would be. But this market has, realistically, other than the last like 7 or 8 days of a lot of like intraday direction, this market's taken a lot of uncertainty and it's done pretty well with it. I mean, considering we've only been 5 or 6% off the highs, I think 8 or 9% on the Nasdaq. We did hit some 200 moving averages this week, which I think is noteworthy. Yesterday in the futures market, we did actually poke the 200 moving average, but I still don't think this is good enough. And the reason why I say that is because the futures market is a bit more volatile, and we did tap the 200 moving average, but we're still having a red day today. If we go to SPX, we're almost there. We're almost there. This is all the stuff that I talked about over the last couple of weeks. Connect your April, your August lows. The 200 moving average is right here. If you're ever using a relative strength, I did set a chart on here in relative strength. I used a 14 period relative strength, and watch the 31 value on the RSI. 31 value. And if we have 31 value getting hit on the SPY, or 31 value getting hit on the Qs, we're trading around right now around 33. Look at the oversold right around that 30 value. You can see that this just took profit on SPX. Good. All right, nice. That was a nice little winner. I'll take that there. Okay, let me do a quick update here for the morning. Update 10:31 a.m. Eastern Time. Beautiful. Okay, so Qs, you can see that anytime we've hit, close to that 30 period, it doesn't hit very often, even on a 14 period. I personally like to use the RSI 21 period just because it's rarely overbought or oversold. But you can see on the, the 14 period, we get overbought pretty regularly. And it's not when it first goes overbought, you want to be protecting profits. It's when you show divergence, right? So if you make a high in price and then you make a higher high in price, what you want to look for is divergence. When you see a higher high from price goes up, you want to see a divergence level in momentum and a divergence level in relative strength. That's where I'm starting to look for topping patterns, or at least protecting some profit. Okay, so as we've been selling off here towards this 200 moving average, we're getting closer to this market, and I wouldn't be surprised if this is a pretty aggressive buying spree. So we're not that far away. Okay, I'm just throwing it out there. Like, this is where I think if you want to be opportunistic in 2025, this might be one of the better opportunities that I have. Okay, so if we come down and tap this 200 moving average, I'm going to start positioning. I think this is an area where I would just take some bites. You know, bull call spread looks pretty good, maybe 30 to 60 days, even 90 days out. We can make some good money. You can go week to week if you want to, but even giving yourself just a window. I mean, I don't think it would be awful. I'll just put this out there. Like, okay, let's say that I'm comfortable saying like today's the bottom. If I'm just going to say today's the bottom, it's not that expensive. If I did an SPX trade, okay, let's go out. Let's say I don't know, 40 some days. I'm going to go out to the end of April. Okay, the end of April, and let's say I'm comfortable saying that we have a bottom. So if I bought a call and I looked up here and said, okay, I think we can get back to 6,000 or we can get back to 6,140. Let's find out. So if I buy and then I sell a, how much is this going to cost me? So if I buy a 57.80 and I were to sell the 6,000, okay, that's an expensive trade. So I risk $11,000 to make $11,000, or risk 11.2 and I make 10.6. Like, it's an expensive trade trading SPX. Take this to the SPY, it's going to be a fraction of that. So I go to the end of April. If I bought a 577, and again, this is not the trade I'm taking. It's just if I was confident this is where the bottom is. If I bought a 577 and sold a 600, let my option chain fill in here. There we go. There. So for $1,100, I could take a one contract trade, risk about $1,000. That's like less than 1% of my account, but I could also make that 1%. It's about a 1-to-1. Do I think that trade is fair? Yeah. But it's also, it doesn't require 577 to have to go all the way to 600. It requires 577 to go to 588. So can we get to 588 and have about a 1 to 2% move in the next, 56 days? Possibly, yes. That's why I like the trade. Right? So anyway, there are ways to trade it. That's a very simple strategy to benefit from this. Another one that's also really nice is, that's all. This is a little bit wider. I mean, maybe you're not going to throw $1,000 at it. That's probably what I'll end up doing for a couple of trades and staggering them out. But another way to make this more cost effective would be, okay, let's say this is where price is trading at right now at 577. Well, I'm going to buy an in the money call, which is more expensive, but I'm going to sell about an equidistant away. So I'm about $5 in the money. I'm going to sell $5 out of the money. And now what I do is I almost take away most of the intrinsic, actually, I take away some of the extrinsic value that I pay. All I'm really buying here is intrinsic value. All that means is I'm buying what it should cost me. 572 to 577 is a $5 move. I'm only paying $6 for this trade. So now I'm only paying about $1 premium on this position. And if price can go up above 582, I can turn this into a $10 credit. So I make a little bit less, like I'm risking more to make a little bit less. But the more I go up here in profit, like move it up by $1, fractionally higher to make another $1. Right? So I'm moving up about 30 to 40 cents every time I move the strike up by $1. I'm paying maybe 30 to 40 cents to make $1. Right? So would I be okay paying, $7 to make $12? Sure. I mean, it's a bit of a trade-off. That's the skew you have in pricing right now, but I like the trade. I like the probability, and this is what I will be doing when it comes to where I'm more confident that we have some lows that are in. So I'm going to take some bites and nibbles, and I've talked about this. I'm going to take some stabs in this area with trades that are probably 30 to 90 days out. And I'm going to try to make a decent chunk of profit here. I've already kind of calculated where I'd like my watermark high to be. If we get even near these all-time highs, I don't need them to get there, but I'd love them to, obviously. But even for this trade over the next 30 to 60 to 90 days, I'd position my portfolio where if we do get a nice little rally, then good. There's good money to be made. Have some ability to cross the watermark highs, get into some new profits for the year. And also, I just closed out some more hedges today. I updated that in my pulver alerts here. So I want to say, I'm just going to search for hedge. So MES hedge, yep, that trade is done. That was a trade that I closed out for like $270 yesterday. So I'm going to jump to that trade and add a reply to that one. So this one is trade management update, MES, hedge play, entry for $95 debit, closed for 260, credit or higher. Nice win on the hedge to help offset this recent slide. Okay, so my hedges were on MES, ES, SPY. Those are my hedges. I have probably protected close to $20,000 or better on this slide. So that feels pretty good. It's not, game changing, but a 20K hedge does move the needle a little bit, and it probably was more than that because I closed out some fresh ones today. So it all it does is allows $20,000 to kind of be banked into, if we do return and I get some of my positions to be repaired, then that's $20,000 that adds to the bottom line, and then profits once I time this more, another hopefully 30, 40, 50, $60,000 of profits the upside. I'd like to try to make a move in here if I can. I'd like to make a move to position my portfolio for another 100K. I would love for my watermark high this year was 195 or so. I'd love for this to get back up towards this level, and I'm looking at close to 300K or better. If that is the case, I'm probably pretty happy with trading for the year. I don't want to just pack it in and say I'm done. That's what I can do this year, but I will be cleaning up a lot of positions, going a little bit more defensive, and trying to do my best to protect some profits and limit some of that exposure. I'll probably make trading for the rest of the year pretty boring, which isn't a bad thing, but I want to make sure that there are profits to be made with this market being very uncertain. Okay. All right. Do I like buying puts? Buying puts 12 months out. Why would you buy a put 12 months out? That's an expensive hedge. And if you buy puts every year, you're going to see that you're just going to lose money. If you're in a bear market, yeah, you'll kill it. But that happens once in 4 years. So selling puts, sure, you can sell puts all year long. It's an easy strategy. Go out to a low delta, sell a cash secured put, be willing to own it. Okay. Don't just expect like I'll sell puts and never take the underlying. Look, if you're going to sell a put, I always treat puts like if I had to own it, I'm willing to own it. It's simple. Like you can't just throw puts out there. I mean, you can manage them. You can say like, well, I'll sell a put and I'll close it out at like a 200% profit or a 1 to 200% risk. I mean, you can, but if the markets are nasty, they can blow through your stop losses too. That's undefined risk. So anytime I put a put out there, like I am willing to own the underlying, although I may not want to. Okay. Anyway. All right, let's go top down here. I do have to run at the top of the hour here, gang. So everyone watching and Chandler too, like I've got a hard stop today at 11. I had a webinar that pops up. So I've got 11 o'clock webinar that I got to run to. But let's go top down. Let's get some work done. We did all things yesterday. I'll do the same thing today. So SPX, I think we're close to all these levels that I've been watching, right? So I'm close to the 200 moving average. I think that now, and you can see the way that price has kind of slowed down today. This is actually a good thing. Price slowing down today for the first time in probably 7 or 8 trading days. I do think that the bearish pressure is a little bit less. I think that the aggressive nature of this slide is a little bit less. It could still have an ugly day or so, but based on yesterday's volatility, based on Friday's volatility, or Monday, Monday was a freaking crazy day. Based on Monday's volatility and yesterday, I think if we settle in here, we also have non-farm payroll. Hopefully the non-farm numbers don't look awful, because that might be another thing that adds the fuel to the fire to say like, okay, the bears still have control because now the U.S. job market looks a little bit dicey, right? Look, at the end of the day, if the economy is looking like it's on the verge of struggling, the Fed is going to be more active with probably cutting rates. And it's not the answer. It's probably not the best thing. What typically happens is we hit recessions when the Fed's cutting rates. Like Fed cutting rates right now in the wake of jobs slowing and growth slowing and inflation still being sticky is not a good backdrop for bull market. It's really not. So I just wonder, like, if there's more pain for, like, oh boy, so it's not just tariffs and it's not just geopolitical tensions and it's not just DeepSeek and it's not just this. Now we've got the U.S. economy that's really slowing, and that's going to be sending ripples throughout the markets. So just saying, like, we'll see what non-farm payroll gives on Friday. I will be out of town on Friday, but I'll be watching. I'm curious what the markets do pricing wise. But long story short is this: we have had a pretty aggressive slide here the last like 7 or 8 trading days. Looking at yesterday's volatility and today being somewhat quiet, if we have some inside candle trading here, Okay. And we have non-farm on Friday, maybe that's our final reaction to see if the market can then, find the levels that I want to see. I still want to see this 200 moving average hit. It's really simple. I still want to see the SPX hit the 200 moving average. I still want to see the SPY hit the 200 moving average. I still want to see XSP hit the 200. They're all the same. They all represent the same index. It's the same S&P, right? I want to see them all hit the 200 moving average. Okay. Same thing is true on the Qs. The NASDAQ poked. Okay. The QQQ actually poked the 200 moving average, but it's still holding onto this streak where it hasn't closed below it in almost 500 bars. So I almost want to see this close below and close above, and then I can start getting long tech. Realistically, I'd rather trade the S&P and the Dow this year than the NASDAQ. I know tech typically grows back faster, but my concern is that there's such a move away from Mag 7 right now, and this whole CapEx spending with AI it's future based, yes, but man, tech is more volatile and it is more sensitive and it can get beat up so much worse. I think there's more resiliency in the Dow and there's a little bit more resiliency and less volatility in the S&P. So I'm going to put the NASDAQ as one of my lower ranked indexes this year simply because I don't want the volatility. I don't want the volatility. So I'd rather trade Dow. I'd rather trade SPY. I'd rather trade XSP. I'd rather trade SPX. I'd rather trade RSP, which is equal weighted S&P, because let's get out of this Mag 7 garbage, right? Mag 7 is they're all great stocks. They really are. AVGO, okay, fine. It's in the semiconductor hype and it's now AI hype. Tesla's been beat up like crazy, right? But we still have top 10 stocks. Berkshire Hathaway, it's not a Mag 7 stock. I mean, that is a fundamentally a strong stock with right now what has one of the biggest cash piles in the market. I mean, Berkshire might be a scary good stock simply because they're going to go on a buying spree when it's appropriate. I mean, Buffett's 94 years old. I mean, who knew that the best diet in the world was Coca-Cola and See's candy? If you want to live to 100, just eat chocolate and drink Coke every day. Guess that's the answer. Or be a, multi-billionaire. That'll keep you alive and well. So anyway, no, I don't know. ADP on Wednesdays, no, who cares? ADP it's not even close. It's never close. It doesn't matter. The market reacts to non-farm way more than ADP. It's just a noise. It's a noisemaker. All right. Anyway, see my point? The Dow still hasn't hit the 200 moving average, right? So that's what I'm watching for. I want to see these levels get hit, and this is my play. If we're down below it, the aggressive side of me would start positioning for the bounce. The conservative side for me would be we close below it, wait for a close back above, and then position accordingly. That would be don't catch the falling knife. That's probably smarter. That's probably less risky. That's probably less stressful, because if we break below the 200 moving average and we have another day down and another day down and another day down, that's going to feel like crap. But if I can get a down day and then an up day above it, that is a little bit better, right? So I'm debating. Do I wait? I mean, obviously I've done this enough where it's like I should probably just wait. Because if we do head lower, I'd obviously rather take some stabs down here than, let's say 10, 15, 20 points higher. Right? All right, really quickly, before I maybe got 15 minutes here. We got plenty of time to still do top down. Let me take a quick peek at SPX. I might throw in another trade since markets are pretty darn cooperative today. Let's see here if I go. I had a really good premium level this morning. Still getting a good level at 58.55. That's just above 58.70 to 80. So 58.70 to 80. That's a 10 delta, and another 90 to 80, another $1.60. I might just let this kind of marinate for the morning. Let's see here. That's below the 200 moving average. That would be up above yesterday's highs. 66.70. That I'm going to take this trade. I'm going to go in for $1.55, $1.60. If you'd like to take this trade, I'm going to $1.60 pending. $1.55 will hopefully get filled. Got filled at $1.55. Okay, so I'm in the trade. I sold the 58.70 call and bought the 58.80. Sold the 56.90 put and bought the 56.80. I'm going 10 wide. It's a little iron condor trade this morning, and I'm going to get into that again. So that's a sell 58.70 call, buy 58.80 call. Sell 5690, call, buy 5680, call. Got filled for $1.55 credit. Okay, that trade is in. Let me throw that into Discord really quickly. Actually, look, it's a 0 DT trade, so it's in and out. You can take the trade or not and put this in an index trade. I'm just going to be, this is a new trade. It's just going to be a 0 DT. So this is a SPX 0 DTE. So it's good today. It's good and over today. Hopefully for a win. So 3/5 expiration. Sell 5870, call, buy 5880, call, sell 5690, put, buy 5680, put, $1.55 credit. This is a 0 DTE Condor. I'm looking for the $1.55 credit to trade for $1.25 debit or lower, ideally $1 debit or lower to protect profit. Oops. So this one's going to be pretty fast acting. I would say if I'm in this trade for the next 30 to 60 minutes, I should get out of the trade for profit. Hopefully if price is cooperating, but that is the plan. Price is pretty chill today for the first time in a while. That's a good thing. And that's fine. And also we do have levels, like if I trade this on SPX. So my call side is 5870. My put side is 5690. So it stays right here. If price is going to stay within this range for the day, if price stays very, very chill today, then I can just let that $1.55 decay all the way down to 0, right? I don't like to hold the trades that long because in the afternoons, certainly late in the day, like 2 p.m., 3 p.m., towards the end of the close, the markets can get a little wonky directionally. Like yesterday, we were up here directionally and then down aggressively. The close here, I mean, there's a lot of aggressive, angry direction that happens, good or bad, towards the end of the day. So I try to eliminate a lot of that outlier risk, but I'm going to try to take profit on that thing for under $1. Okay, but trade is in. So I'll monitor that for the morning. I've got about 10 minutes left. Let's go top down. Everybody clear on the thoughts on the 200 moving average? We're almost there. The nice thing is the pace in which the bears have had control here for the last week or so is kind of stalling. That's not a bad thing. If you look on your charts, I think something as simple as the RSI 14 period, look for that to hit a 30 value, like hit the oversold condition. The market's probably going to have some lift from there. Hitting the 200 moving average, probably the market's going to have some lift from there. Anything below the 200 moving average and back above it, the market's probably going to have some lift from there. So as far as timing this, that's how I can see some technical indicators all lining up. Okay. All right. Dollar index, ridiculous 3-day move. Like ridiculous 3-day move. This is not a bad thing. And the US 10-year is up. So I don't love seeing the US 10-year up, but holy shnikes, dollar index dropping. And why would this be the case? Growth risk on US tariffs. Well, is it really tariffs that's causing the dollar to drop, or is it the fact that the Fed is now looking to cut more? I mean, I think it could be a combination of things, but look, I think the Fed, again, just continues to change the narrative right under our nose. It's like we follow this stuff, but now look and see. I mean, we have even a potential probability of it's not high enough to get this blue to pop up in May, but the market's still expecting a pause through March. Okay, so no emergency cut or anything. But even through May, it's like it's a 52 to 44 right here. I mean, is the Fed going to move it and cut rates earlier? Even still, June expecting to cut, and now the probability it's slightly shifted where July may also be a cut. and even September, July or September. One of those two is going to be a cut, and then October might be a cut instead of December. So, I mean, we're back in what we thought was going to be 1 or 2 cuts to then 0 to 1 cut to now up to 3 cuts. I think that's where the dollar is starting to really move, is now the Fed is looking to cut more. This is supply side economics. This is QE all over again. And I don't know how this goes well, ends well. I do think that recessions tend to happen way more in a cutting cycle than they do in a raising cycle. So I don't know, but this is probably not a bad thing. Having the dollar get weaker is good for broader market flows. This is good for risk appetite. The dollar index to the upside was, we saw a lot of this narrative when the dollar was getting stronger here, how much pain the market should be facing. It's going to be high. It's going to be harder for the stock market to go higher if the dollar is getting this strong, which is true. So the dollar retreating here is probably not a bad sign. Okay. Now, is it full on retreat? I mean, I don't know. I'm just staying out of the dollar. All I know is that my euro dollar is blowing through that 106 handle, which is why I didn't short it, right? I was like, if we're going to short this thing, let's get some confirmation, this 105, 106 zone, and then break a trend line. We didn't get it. It blew right through it. So this is also a 3-day, very inefficient move. So I don't know if this is like the setup for the market to then do something different, or if this is now a new trend, because if we stay, and it's pretty simple, if we stay above 105, I would be a buyer here, right? If we're in this area, a little pullback here, and this, why not? Why can't we recover? There's strong support. There's good asymmetry. I like the structure. I like the area. Same thing on the pound dollar. This should help my Kiwi dollar quite a bit. Okay, back to break even on the Kiwi dollar. Aussie dollar, back up there. That's nice. Those have been beat up pretty badly, but pound dollar, again, did it break the right-hand side of my trend line? Nope. So there's no sell trade. Euro dollar to break the right side of my trend line? Nope. There's no trade. Dollar CAD has barely moved. Dollar Swiss dropping nicely. I'm fine with this. I want to reload on dollar Swiss. If it comes back to 86 or 85, I'm going to load back up on this thing. Dollar yen breaking some lows. This could be a topping pattern on the dollar yen. If we pull back at all, this could be a really nice swing trade. I also would hate to hold this position. I'd hate to hold this position short in the currency market simply because I don't want to pay the negative swap. But I think right now your best exposure, if you are currently trading dollar weakness, pound dollar, euro dollar, probably the best trades. They are getting the most love for this weaker dollar. Aussie, New Zealand, still, they've been so weak. They're recovering. Swiss is pulling back a little bit. JPY is still chop city. So, CAD is not budged. I would say your euro pound are a better place. Right. So anyway, that's some currency stuff. Gold. I'm still going to wait for a pullback. This is another bar count that I'm watching very carefully. I'll wait. I will wait. If gold goes higher, cool. Gold and silver. Silver is actually looking better. Let's compare the two. Okay, so this instrument, this is gold versus silver going down. I kind of love seeing this because if this continues to head lower, then that means silver should be going up. My silver futures position, so SI. Oops, I need to go SI for silver futures right here. Looking better. So I have this trade out to March. This is a nice little 0.6 credit, 0.06 credit, which is maybe $300 or $400 trade. And then I have SLV, which I own, and looking better. So credit spreads looking good. Diagonal spreads looking good. Bitcoin, chop city. But another one, if we start seeing some oversold conditions in the markets, 200 moving averages hit, we see the market starting to lift off. Bitcoin probably catches this bid as well. So if Bitcoin can stay above 75K or stay at 75K, this kind of building zone would probably allow a relief rally in Bitcoin. I think Bitcoin coming back to 100K would probably make everyone feel pretty darn good. I don't know if it's going to necessarily go gangbusters bullish, but I could see Bitcoin at least making a run back up to 100K. So if Bitcoin traders are patient, which they're not, and I know I'm generalizing, but typically I would say it's more of like, if you're chasing meme coins, you're not a patient trader. Good luck. Bitcoin as an instrument, though, sure. I'd like to see this area consolidate, see if we can get back up to 100, 105, 107,000. That's going to feel pretty good. What else? Copper. I've got copper coming in here in just a second. MicroStrategy up to 283. This is fine. Coinbase up to 212. I will hopefully, I've got a 111 trade here for $1. I would, if I take on any shares of Coinbase, it's going to be at 190 or less, which isn't bad. Ethereum, I wouldn't touch that right now. Copper is looking freaking fantastic. This copper trade here should be a nice little income trade. This is looking pretty good. So copper up about 87.50. I think my max profit in this one should be about $160 on a one contract trade. So right now, if I close it out, what's the trade at? So I collected 0.007. So it'll be $180 per contract, $180 per contract. But copper's looking fantastic. So this trade that I took, basically positioned myself. So once we had this break and pullback, I was positioning for a 111 trade in copper, and I did put in a wider spread. So it's technically a 1111. So it's defined risk, but that's looking pretty good for a win. And now it just has to wait for time. Time on this one, it's out to April 24th. I'm not that worried about it right now. It's showing about a 95% chance of profit. That based on the option prices and the current out of the money movement, this is unlikely going to be tested or threatened. So copper's looking fantastic. Okay, I got to go. I've got just a couple more minutes here. DAX creeping up towards fresh highs again. FTSE, a little bit of a headache, but still better than the S&P. I mean, we've got the European markets doing much, much, much better than the S&P right now. We still have China. Nice rip on China. Let's just do some China scoping out. We are sitting at, where's my China stocks? Right here. HSI is up. CQQQ is up. Alibaba is up. Baidu is up. Okay, finally. Good. So I got a collar trade in Alibaba that I'll still manage. This one's out to April. FXI making some moves back up towards those September highs. KWeb has room to probably get up to September highs. This is MCHI, which is a China ETF. Again, room to get up to the September highs. JD is hanging in there. We have earnings today after market. So if we hang out, I've got this one with a collar and it's called away at $40. This is out to March 21st. I could also consider if we're way up here again, I could probably roll this for another 30, 40, 50 cents. I do have 1,500 shares, so I might just income this thing for another week or so. But I'll wait for earnings. And that is going to do it for my time. So I got to go. It's 11 o'clock. I got another webinar. But appreciate everyone being here today. Have a great Wednesday. I'll see you tomorrow. All right. Thanks, everybody.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.